Unbelievable action, team. Good morning, team. Shout out Todd Macon. Shout out Quiet Soul. Shout out Dr. JB. Shout out Jamani B. Peace of hands. Everybody else on Kick who's kicking it with us as well. Putting together my plans right now. Very, very interesting. Boom, boom, boom. Okay. As the market is trying to break back into this larger control buying algo. When I showed you and talked about last week that she was trying to break out of, now she's trying to get back into it. Some overhead resistance here at the 690. Immediately here. Interesting. 6, 7, 8, 9. Just a lot of movement going on right now. Not really too sure this morning. This is where the market wants to be. Very interesting. I'll just take my time with it this morning. Take my time with it this morning. I have no rush. Let me see what the market is saying. Clear overhead resistance here at the 690 and then at the 691. We're gonna have to let this play out. I'm gonna have to. Bulls on the run. She's also retaken control of the month. The Bulls have control of the month. This has been a very volatile month. This month has been very volatile. It really has been. It's been a very volatile month. Both sides. We have a nice little gap up. Do we have a nice little gap up? Almost $5 gap up. I do not have any plans for today. I don't. 689 underneath the 688, possibly. Yeah. Only thing I would be interested in is if we did come back and break outside of that control buying algo. Only thing I can see right here is if we get down to that 688 area, below it, I don't know. Yeah, I do see that though, because that would bring we be coming right back out of this algo. As far as the upside, I do like above the 690. And I believe if we do get above the 690, we're probably going to touch 694 today. Okay, let me put my plan together. Call absolutely worked. And the put worked. Never seen that in the day before where the call worked and the put worked. Beyond anything you could have thought or imagined. So for the call, 689 call, 694 entry, 694 profit target, 689 call, strike, 690.4 entry, 694 profit target. And if she does come down the other way, we'll go with that same 689 strike price. Look for a 688 entry area. $685, 7 on the max on that. 686. 5 possibly on a drop. All right, we got some plans. Let's see how they line up. Let's see how they line up. We're putting something together. We're putting something together. Big Ben is in the building and Kosie's in the building. Alright, so I'm looking like that's what it's looking like in crayons. Alright, I just need to follow a color guide, rather, let me say that. That's what I'm looking at. Alright, let's bring it over to the Thinkorswim chart. We also have a 10 o'clock report today as well. So keep that in mind to get to traders. We have a 10 o'clock report today. Bulls have control of the week. This week has gone all the way down from 676 all the way up to 690. What a week. And today is just Thursday. Okay. Yarhamukallah. Okay. As we get ready to start today, team, we are in a control buying algo. Let me put pre-market on the screen so you can see it. Less than 1 minute before we get started on today. And of course we will start with the 5-minute chart blown up, including yesterday's action. In this control buying algo, coming into market open, let's see what happens. Bismillah as we begin today. Now that retail is involved, let's see what's going on. Big Ben MYM is in the building. And Kosi said, I'm going to wait for the break and retest after the 15 minutes. More likely, I'll wait 30 minutes. Thank you guys for sharing your plans. Dr. JB is in the building. Good morning, Dr. JB. Shout out to you, Dr. JB. Shout out to Quaint Stepladder on Kick. Developing Gamer on Kick. Thank you for joining us. MYM is in the building. Big Ben said, I'm gonna wait for a break and retest off the opening range of the 5-minute candle. Okay. But more looking than jumping. Avoid missing it. Thank you guys for sharing your plans. Thank you so much. I do appreciate it. So we got Nkosi. He said he's going to wait for that break and retest after the 15-minute. Maybe wait for the 30-minute. Big Ben said he's going to wait and look and see what's going on after the 5-minute. Jesse Swanson is in the building. Said he's going to take it easy. Dr. JB, what you thinking about, sir? What are you thinking, sir? How do you feel about this big move? I mean, a huge move. And don't forget, we still have that 10 o'clock report coming out. Big move from the 686 all the way to the 690.3 where we're at right now. Amazing. Market is fully recuperated that $10 drop. Let me show you what my trading view chart is looking like. This is what we're looking like in the trading view chart. So we are in that very nice controlled buying algo. Is it sustainable? Looking to see what takes place above that 693 area, which the market price is coming up to now. So again, just taking my time, looking for something obvious. Dr. JB says he is ready and waiting. Jesse said he is taking it easy this morning. Thank you guys for tuning in. As we are preparing for a winter storm, reportedly unlike no other in the past couple of years. They're saying it's going to come Saturday night. Allah knows best. Until Sunday. That's what they are predicting. But based on that, they are advising us to prepare as though you may be stuck in the house for days. Again, and Allah knows best. But they are advising that you get ready to be in the house for days. Virginia is not equipped to deal with snow, sort of like Atlanta. 2 inches of snow here, they will shut the whole city down. I'm talking about there's no school, you don't have to go to work. You know what I'm saying? You know, the city here depends upon independent contractors to remove the snow. Need I say, we don't even have salt here. Need I say more? They be out there sprinkling cat litter. But I have helped quite a bit of my neighbors with some of my Chicago techniques as far as the windshield wipers up and putting a towel across your front windshield. Yes, that's correct. I said a towel, a bath towel, to cover the whole front windshield. That way, after the storm has gone by and it has passed, when you come outside and remove the whole towel, your whole windshield is nice, clear, and frost free. So, nice little tip there for you guys. Any of you who might be experiencing this little storm coming up, we know we have traders from all over on this channel. So if anybody else has under advisory like I am, don't mind if you do sharing a couple tips on what you're going to do just in case. I've already myself started cooking some extra meals that I can put away, like a roast with potatoes and onions. Delicious. Got me a nice little roast that I have. I've also made a nice chicken salad. Oh, this chicken salad was the bomb. I went and got a rotisserie chicken. Okay? Pulled the meat apart. Don't use regular mayonnaise. Use the olive oil. It's much more healthy for you. Celery. Avocado oil. Thank you for the correction. Avocado oil. Celery, red onions, walnuts, grapes, a little bit of sharp cheese. Whip it, whip it, whip it. Delicious, scrumptious. So I got a nice Tupperware of that set to the side. And yeah, man. Now, if the power goes out, we do have a plan B for that. But Dr. JB says 86 degrees in Cali. Way to rub it in. MYM says he's waiting on that 5 minute as well. Big Ben said, I had my avocado today. Okay, Big Ben said he had his avocado today. Yeah, man, I love avocados. I do. Is avocado a fruit or a vegetable? Of course you know. Give somebody else a chance to answer. I didn't know though, so she told me something.
I was a smart kid to raise my hand in class.
Yeah. Well, guys, those of you who are looking at that 5 minute, opening range, I do want to point out to you that we do have some overhead resistance. This resistance that I have here at the 690.3 is weekly resistance. And then believe we could take this all the way to 694 possibly today. We've gotten a break now of that 690 area, 690.4 area that I like. The only question is now, where will the candle close? Are you looking for a break of this area, or are you looking for a break and retest? Time will tell. Also, keep in mind, first 5 minutes, very volatile. First 15 minutes can trick you. Have you thinking the market's going one way, completely go a different direction. I'm going to relax a little bit, at least till 9:45, so I can have something to base this information upon with another candlestick on that 15 minute. Guys, I'll be right back. It's time for me to go ahead and enjoy a cuppa, and I hope you do the same and stay safe. Be right back. Thanks for tuning in and for hitting the like button. Team, please tell me y'all safe, man. Please, please, please. Right before I stepped away, I just got finished talking about letting that candle close, looking for the retest, watching out, knowing what's going on in the first 15 minutes, have the ability to trick you. Please just tell me everybody is safe right now. I told you guys I'll be back at that 9:45. I'm coming back right now. I wanted to have something to compare this movement to. The market has been extremely volatile. Extremely volatile. So in times like these, you have to be extremely cautious. Extremely cautious. Safe and sound. Okay, good, good, good. C8 is in the building. Walaikum assalam. Hamza is in the building. Yes, sir. And Cozy's good. Quiet Soul is good. Okay, the team is safe. That was a heck of a move there, guys. That was a heck of a move. And that's also the importance of waiting, letting that foolishness shake itself out. The later in the day has been providing a lot more solid movement, even though it's been volatile as far as the range is concerned. But I don't know. Let me see what's going on with the regular market. Again, guys, that's why I said that I liked over that 690.4 for my entry. I wanted to see us have a close and a continuation in that area, or possible break and retest, but still knowing that time-wise, it was just still a little bit too early for me to trade. We're still in that controlled buying algo. This is getting interesting because now this is where I'm like my put. I like my put. Okay, 688. And I believe we can take that all the way down to 686. 5 to 685, 7. I like my put around like 688, 5, 688, 4. I'm going to say like around 688, 3 with a break and retest. So that's what I like on that. So now I'm going to go ahead and re-put my alarms here up top for the call. If we do get the opportunity to come back up and break that 690.4, I'm going to go ahead and get busy with a call. Now she's approaching my area that I like for a put. But I'm going to need to see something just a little bit more. I'm not just going to get in it because it's at my area. No, no, no. The market, however, is strong. The overall market is strong. And don't forget, team, we still have a 10 o'clock report coming out. She's coming down to the bottom of the algo. That's all she's doing right now. She's doing what she's supposed to do. Just keep that in mind. She's doing what she's supposed to do. That's all. For now. She's doing what she's supposed to do. Let me blow it up here on the 2 minute so you can see it clearer. There it is. Okay? She's doing what she's supposed to do. She just hit the bottom algo line. She's doing exactly what she's supposed to do. Okay? The question is what's going to happen here. All right? Because I like this 688. I do. I like the 688 for a put. But it's still too early for me. And especially we had this report coming out too at 10 o'clock. Maybe that might mean something, maybe not. I don't know. For you ORB traders, very clear entry at the 689. For you ORB traders, you had a very clear entry at the 689. Let me know if anybody took it. ORB traders had a very clear entry at 689. Right there. Right there at the 689, you had the last of those bulls in that tail get squeezed. So that's exactly what you had happen there. I'm going to be patient. Let the market continue to do what it's doing. Let's see what the news is right now. U.S. stock jumps and fear gauge retreats following Trump's U-turn on Greenland. Stock indexes jump after Trump's Greenland pivot with Fed preferred inflation data due. Alrighty. So that is the latest. And again, it's not the news. It's all about the reaction to the news. Let us see what is happening now. Again, continue to be patient. Looking to see if this could be a lower high. Love to see this thing go all the way back to the 688.5. Come on, bounce all the way back, please, to the 688.5 to give me a deeper opportunity to get in it. Alrighty, I want you to be able to see this controlled buying algo that we do have set up here on the 5-minute. Looking to see if we're going to have a repeat of what took place this morning, hitting the bottom of it and bouncing off of it, or if we will break it. if we do break again, I'm looking for a break and a retest before I'm comfortable getting in this position, heading back down to the downside. You guys know how I feel about white lines. This white line represents a tipping point. It represents control. It represents control transferring from one party to another. Above the white line, the bulls have control of the overall market. Below the white line, the bears have control of the overall market. This month has been very volatile, back and forth with control of the actual monthly candle itself. It's just been playing itself out week by week, and here we are on the 22nd, experiencing a $10 drop and a $10 recovery. So the market is absolutely moving, but we have to be very, very careful and pick our positions very wisely and safely. I just want to show you that here on the 5-minute chart as well, that we are sitting at the bottom of this particular selling algo and could potentially break it. Keep in mind, in less than 4 minutes, we have the 10 o'clock news coming out. Don't know if that will have any impact, but do want to make you aware that we do have some news coming out at 10. The overall market is green. The overall market is green. Keep that in mind as well. Even though we're having a red day today slightly, the bulls have control of the week. Top right corner is the daily chart. Bottom right corner is the weekly chart. In the middle is the 30-minute. To the left is the 15-minute. Above that is the 2-minute. And up top is the 5-minute. So this is what we will look at here for today. And we can slightly start seeing the bears trying to grab a little bit more control, but keep in mind we have that 10 o'clock report, guys. I'll be right back. Whoa, Dr. JB, 692 put, buddy. Yes, sir. Beautiful, beautiful, beautiful. Big Ben, 691 put. Yes, sir. Beautiful, beautiful, beautiful. Yes, sir. Taking advantage of that ORB. Ben is very, very favorable on that ORB strategy on the 15-minute chart. And that ORB did provide, like I said, a beautiful entry at 689. Glad to see that a couple of the teammates went ahead and jumped in on that with 692 and 691 puts in the money. So those definitely paid off well. That's exactly what I'm talking about as far as picking your move, knowing when to get in, knowing when to get out. Solid move. Hamza C8, you keeping it straight? What you looking at, Hamza? Tell me what you're looking at, what you're thinking about. Right now we are in a controlled selling algo. There is one that has been formed. And she's very, very precise. I'm going to go ahead and put that up on the chart for you right now. She's straight now. There she is. Two competing algos. $10 o'clock report coming up in less than 30 seconds. I'm going to go ahead and let that report come out. let that report settle, and then see what is left. Big shout out to the team who's already gone to the bank. Catching that very nice put as the market bumped its head on that ceiling, as I told you guys about that weekly resistance at the 690.3 area, which is why I like 694 for a call. Rejection of that area came down very, very strongly. Market sentiment changed as that 5 crossed below the 20, presenting a beautiful put opportunity that our teammates have capitalized on. Great work, guys. $10 o'clock report is upon us. I say a very good depiction of what is going on between these two algos will probably be the 30-minute chart. Let me pull that up right here, where you can see that controlled buying algo that we're in here in orange, but also this controlled selling algo that has taken place now at market open. It's going to be very interesting right now. I'm going to continue to allow the market to show us what it wants, but also I'm keeping in mind exactly where we are on the charts. I am going to go ahead and remove pre-market. Off this 5-minute. Okay, I've removed pre-market off of this 5-minute chart as well. So now we have yesterday's action, the close at the 685 area, the jump up to the 690, the gap, and the crap that is ensuing right now. We had the gap, but she is crapping right now. But we have to keep in mind that the crapping that she's doing is still taking place inside of a larger buying algo. I'm going to highlight it here on the 5-minute chart, make it just a little darker. Very interesting. I'm going to continue to be patient. Thank you guys for sharing your trades. Dr. JB said he's still in it. Yes, sir. Still in it. I guess lunch is on you today, Dr. JB. Hamza C8 said he's driving and listening to us. Thank you for doing that, Hamza. Keeping us tuned in. Yes, sir. Big Ben congratulating the team, Dr. JB and Nkosi, on that trade. The market has definitely been providing some beautiful opportunities, though. we definitely got to give it up for the market. There's definitely been some beautiful opportunities to get some money. All right, team, I'm looking now towards 10:15. I'll be back closer to 10:15. Thank you guys for tuning in. Thank you for hitting the like button. I do appreciate you. I know it, Cozy. I'm going to answer mine now. Big Ben said he wish you would have stayed in. Dr. JB said it's at $5 right now, man. Come on, man. Yes, sir. Be back closer to 10:15, guys.
back to Money Movers. President Trump yesterday walking back tariffs on 8 European NATO member countries following that announcement of a framework deal around Greenland control. Tariffs and geopolitics, of course, dominating the conversation this year in Davos. Our next guest owns and manages a slew of clothing brands, including Nautica, Aeropostale, Lucky Brand, Forever 21, Brooks Brothers. Here with me now in Davos in the CNBC exclusive is Authentic Brands founder and CEO Jamie Salter, which has now grown into almost $40 billion in sales. Jamie, it's good to see you.
Great to see you, Sarah. Thank you for having me.
What is the state right now of the global consumer?
So far, the global consumer is actually performing quite well. We have not really seen a bump in the road as far as tariffs go in the U.S. Let's be honest. We probably saw tariffs last year 50% of sort of what we're going to see this year. So this year, tariffs will be twice as much as what we paid last year.
Why? Why does it go up so much?
It's not that it's going up so much. I mean, a lot of people were able to sort of manage their inventory properly, put a little bit of pressure back on the sourcing side of the business, and pass it on to the consumer. The biggest question is the consumer really going to sustain these price hikes that we're going to see over the next 12 months?
So only half of the tariff impact has been felt, you think, on consumer?
I think that definitely prices are going to continue to go up. Because they have to.
On apparel, accessories.
Apparel, footwear, accessories, beauty, all the various different categories that the consumer buys today.
You have the kind of pricing power to do that?
I mean, look, to me, my opinion is people, continue to gravitate to brands. Brands, are very emotional. And if you have a good brand, the consumer is willing to pay up for it. The biggest question is where are we going to see the pause? Are we going to see it more on the value side, the mid-tier side, or the luxury side? We've seen definitely some pause on the luxury side. Mid-tier seems to be holding in there, and that's where we play. Sort of 80% of our business plays in that market at Authentic.
What about the low-income scale? Because that's something that the administration's been really focused on in a midterm year.
I mean, look, at the end of the day, tariffs are tariffs, so they're going to be on value product, and they're going to be on high-end product. I definitely think it will continue to hit the consumer, but you're going to see some, winners and losers, through this. Walmart continues to be a big winner. So TJ Maxx and Ross and Burlington, they also seem to be winning. And, the clubs continue to win. So we actually think that, the market's actually pretty good.
And speaking of brands, you're adding new brands all the time. You've done a ton of acquisitions, including Guess. What's the story there?
So Guess, we announced, I guess it was about 4 months ago, that we were going to be buying Guess. And it is happening. All the regulatory approvals have been approved, and we will be closing Guess momentarily. If not the next 24 hours, definitely early next week.
So like actually momentarily. We've
Yes.
got some news here. When it comes to your model, I think we should remind people what you do is not necessarily manufacture, you license. Talk a little bit about the growth you're seeing in that area.
I mean, look, our model is sort of winning, right? We buy these brands and we license them off by category and by territory. And we work with best-in-class partners all over the world. And what we're seeing is that model is becoming the winning model because it's putting more margin, into the retailers and the wholesalers. And what's happening is that extra 10 or 15% that they're making by licensing our brands, clearly is the difference of making money and losing money for these retailers and wholesalers.
The helicopters are out as the world leaders are leaving. That's the noise out there. Another brand you recently acquired is Kevin Hart. So how does that work, adding to the portfolio with David Beckham and Shaq?
So Kevin Hart, yes, we are now partners with Kevin Hart, where we acquired, basically 50% of the brand. And Kevin Hart, he is, he's a legend, obviously. But what we've seen is Kevin Hart, early days, we started managing his business about 6 months ago. And, because that's what we generally do. We sort of date these people to make sure that we want to do a long-term deal with them. So we've now completed the long-term deal, and we're very optimistic that Kevin Hart's business will continue to grow and probably double in the very near future, specifically on the merchandising side, but also on the entertainment side.
Like what? He does like branded apparel?
Apparel, footwear, eyewear, and all your traditional categories, and we're really going to be going after the kids business with him. Where it's called Mini and Mighty, which Kevin Hart is very passionate about because he's a family guy, and he really, it's a very interesting concept. It has a lot of
small and buff.
and yeah, exactly, Mini and Mighty, and he's small. I'm actually a half inch taller than Kevin. I tell him, actually, I remind him every time I'm with him.
Well, yeah, okay, that's good. I like the branding on that. What about other deals? What are you sort of valuations in the market around some of these retailers because of what's happened with tariffs? We are starting to see some real winners and losers. So how active are you going to be, and what do you think of what's out there right now?
I mean, definitely there's an enormous amount of opportunity, and as Authentic continues to become a global player, we're now in 150 countries around the world. So we're not just looking for brands in the United States, we're now looking for brands to buy in Europe, and we're actually going to continue, look at brands even to buy in Asia, because the world's continuing to get smaller, and we continue to actually get bigger, around the world. So we really think that we're in the early days of our business model. People say, are you in the fourth inning? Are you in the eighth inning? I think we're actually in the third or fourth inning.
In terms of growing the portfolio?
Yeah.
Ultimately, how big can it get?
I mean, I've told my partners I would like to see the company in the next 5 years doing, sort of $100 billion of system-wide retail sales on a global basis.
All right, so 40% there, I guess.
It's more than 40%.
Yeah, more than 40%.
Because today we're, 38 billion, and to get to 100 billion, we're going to have to do probably about 12 acquisitions, because the acquisitions that we're doing now are much bigger than what we've done in the past. Reebok, Champion, Guess, all big acquisitions. So we're really going after big targets now, and we think that, with the pressure with the tariffs, there's going to be lots of opportunity to buy some other big brands.
Well, we'll keep an eye on that. We always appreciate you talking us through the strategy and the business. Jamie, thank you.
Thank you, Sarah. And I appreciate you having me today on the show.
Of course, Jamie Salter, CEO of Authentic Brands. Carl.
Sarah, when we come back, the underappreciated progress of some of these Chinese AI coding models and the potential threat it poses to U.S. dominance in that space when we come right back.
Yes, sir. Dr. JB, loving this area we're coming back up to right now. Wondering if it is sustainable for those of you who like cups. Coming back up to this 690.4 area will be a completion of that cup. Look to see if we will have a handle. Also look to see if finally we can get that continuation move forward. Sir. Still operating within this algo. Again, thank everybody for tuning in and hitting the like button.
We closed the S&P last Friday at 69.26, pretty much where we are right about now, as the S&P has managed to erase some losses for the week amid some of the drama, especially regarding trade and Greenland and Davos. Dow up about 450 here. VIX still very well behaved below 16, even though bond yields have been pretty sticky in the wake of some economic data today. Meantime, a top-ranking Chinese AI startup limiting access to its coding agent due to high demand. The company says users from both China and the U.S. both flooded the site. Our Deirdre Bosa has more on that in today's Tech Check. Morning, Dee.
Hey, good morning, Carl. So this is really the first clear signal that Chinese AI models, they're not just catching up on quality, but they're pulling real coding demand from U.S. developers, enough to hit compute limits. Like DeepSeek before, Jipu AI was largely unknown here until recently. Now it is showing signs of a similar breakout. In just the past few weeks, it's gone public in Hong Kong. It's released a major new model, which it says was trained entirely on Huawei chips. And now its coding assistant seems to be having a viral moment. In an email, the company tells us that online traffic has jumped 5-fold and calls the subscription cap a protective move to maintain performance for existing users. Now, the most striking detail, Jipu says that the user base for its coding plan is primarily concentrated here in the US and in China. That was surprising to me, so I checked in with a few sources here who confirmed the model's presence in the US, one telling me the model is gaining popularity and it's very good on agents and coding, certainly enough to be in the mix. Now, Jasmine and I tried it out ourselves, asking Jipu's chatbot to make an app that tracks the top public companies in Hong Kong by market cap, notifications when the list changes. Here's what we got from just one prompt. This also highlights how open source is becoming China's edge in AI. Jipu, like DeepSeek, it's using open models as a distribution strategy because they're cheaper to run, they're easier to customize, and they're harder to be cut off from. So you do see many startups using them. And even though people like Anthropic CEO Dario Mode, he's playing down the China threat. In Davos, he just did that the past day. I mean, look at the leaderboard for open source AI models. 7 of the top 10 are Chinese. And on coding across open and closed source, China is catching up. GLM 4.7, that is the Jipu model that I'm talking about. It's now in 6th place, another Chinese model right behind it. Guys, we know how quickly these leaderboards can change, and the Chinese are moving very, very quickly.
Dee, I'm just thinking back to the market reaction when we first heard about DeepSeek back in the day. We've definitely gotten more mild reactions as time has gone on, right?
Absolutely, and I think that it shocked the market, DeepSeek, but then a lot of folks wanted to write it off, say this was a one-off, and it didn't mean what everyone thought at first, that NVIDIA was going to become threatened by the rise of Chinese open source models. But I would say over the last year, that was almost exactly a year ago, we've just gotten a lot more breadcrumbs, really significant ones, from the Chinese AI labs and companies that shows that they are making real progress. So there's the model side, Carl, but there's also the hardware side, and I think that's going to be really interesting in the year ahead, the kind of progress that Huawei's making, but some of the upstarts that have recently gone public, like More Threads and Meta X, there's certainly something that investors here should have their eye on so they don't get surprised in another DeepSeek-like moment, which, there's a few contenders for those.
Deirdre Bosa, I got to say it's a big topic here as well, and really interesting to see Jensen Huang, who is here from NVIDIA, being hailed by the administration as our national champion versus China's Huawei. Up next, we'll hear from the CEO of CrowdStrike here at Davos on geopolitical tensions, increasing cyber threats, plus some deal news to get to. That's after the break.
Thank you all for tuning in. Thank you all for tuning in. For those of you who made some money in that call, shout out to you. Congratulations. You deserve it. For those of you who are remaining patient, shout out to you as well. You deserve it. Welcome back to Money Movers. Take a look at shares of CrowdStrike, down nearly 4% year to date, trying to avoid the first 3-month losing streak since 2022. It's been a big winner over the last few years. I got a chance to sit down with CrowdStrike CEO George Kurtz here at Davos earlier this week, where we talked AI, cybersecurity, and geopolitics. But we started with the company's news, newly announced regional cloud deals. Listen. So you actually have some news that you're coming out with today around your business. What is it?
So we announced a sovereign cloud for both Saudi, UAE, and India. And essentially, sovereign cloud is really meeting customers where they want to have their own data housed, locally in country. And it's just another way for us to provide what our customers are looking for.
Is that something that doesn't already happen from these governments?
Well, each country has certain requirements for where their data resides. So we want to make sure we meet them where they have their requirements. And obviously we operate worldwide, and it's just further expansion of our geographic footprint in those areas.
So it's a big source of growth for you.
Absolutely. Yeah. I mean, if you look at Saudi as an example, UAE, certainly India. These are all massive drivers of growth for CrowdStrike.
Because when we would see NVIDIA, for instance, strike a sovereign AI deal,
right.
It would be
it's similar
good
to that.
business for them.
It's similar to that.
It's like
yeah.
that, but they're doing it.
It
for
opens
cloud.
up more TAM opportunity for us.
Yeah, a total addressable market.
Yes.
That is. So I was going to say, what's the competitive space for this, and how big is the market?
Well, I think you have to go back to security in general. The market's huge, and of course it's competitive, and where you operate is going to be just one element of how you deliver what the customer needs in stopping breaches. The broader dynamics is going to be around AI and protecting AI, and a big part of data sovereignty is having data that's used for training and those sort of things that can be within the country. So given the boom in AI, given what customers are looking for, given the nature of sovereign AI, we want to be able to protect all those workloads wherever they reside.
How much of your business is being changed by AI, accelerated in terms of demand?
It's absolutely changing technology in general, and certainly security. And when you think about what organizations are trying to do, and I'm sure you interviewed many, many CEOs today, it's about AI. It's about how AI can transform their business and how they can do things better for their own customers at better operating costs and really better outcomes. And in order to enable AI, you have to have security.
What are we seeing in terms of cyber activity, specifically around nation states, as we have started 2026 with a lot of geopolitical angst and risks rising?
Well, whenever you see geopolitical tensions rise, you see security rise. I mean, it's a direct correlation. If you think about what's happening in the landscape today, there's a lot of countries that want to know what other countries are doing. There's a lot of countries that want to know what the U.S. is doing, and in particular U.S. companies are doing, because the geopolitical landscape isn't just country over country. It's the entire supply chain. It's the entire corporate infrastructure, and they've been very, very active as of late.
Where, Iran, is that?
Well, you have Iran, you've got China, certainly very active, and if you think about the race to AI superiority, this is a big one.
Kind of tying all the themes together here in Davos around AI, rising geopolitical risks, Iran, all of these big topics here. Carl, well, we've talked a lot about policy and geopolitics and comments on the economy. There is this sort of subplot that has been happening in Davos that I'm sure you've been reading about. It's getting a lot of buzz and attention, and that is all of these clashes. Governor Gavin Newsom of California here in Davos, just basically trolling the administration, sitting into World Economic Forum panels, for instance, with the Treasury Secretary Scott Bessent, and sitting in the President Trump's speech. And then the Treasury Secretary really going after him, calling him nicknames, saying he reminds him of a mix between Patrick Bateman, of course, the fictional character in American Psycho, and Sparkle Beach Ken, was, I think, one of the pretty sharp jabs he made. Governor Gavin Newsom saying he was denied entry to the USA House, which is the American government's sort of installation house here in Davos, and really insulting some of the Trump administration. There's that, and then I'm sure you've heard about this dinner where Commerce Secretary Howard Lutnick spoke in front of world leaders and global CEOs, and ECB President Christine Lagarde, I have heard, walked out during the speech when he was trashing Europe and some of the policies that it has been put in place around climate, around migration, around spending. So there's a little bit of a clash of personalities here with the Trump administration. Al Gore, also the former vice president, booing Secretary Lutnick at that dinner. I have heard that did happen. Remember, Al Gore is fighting for climate change, so wasn't thrilled with the secretaries. And then I heard Larry Fink, who has hosted this whole thing, was hosting the dinner, wrapped it up early, even before dessert, because it was getting a little tense. I think the alliances are all intact here. Sounds like Trump made a deal with NATO, but there were some confrontations along the way that kept the press certainly pretty alert.
Of course, we're still on the hunt for specifics about that framework deal regarding Greenland and what the incremental win is. Very little visibility on that, even after Trump spoke to our network. I do wonder, Sarah, whether you think these personality clashes are going to extend into policy after Davos, or what stays in Davos, what happens in Davos stays in Davos.
I don't know what happens in Davos stays in Davos, but I do think a lot of it was bluster. And one of the messages from the administration was, everybody take a deep breath, let's not overreact. We're here to make a deal.
Yeah. Great coverage all week, Sarah. We got to hand it to you. Our eyes and ears, Sarah Eisen in Davos. Let's get to the
Okay,
judge.
team, I have just now gotten into a put.
I'm Scott Wapner, front and center
I've
this hour.
just now gotten into a put.
Committee, as always, joining me for the hour.
Okay, I repeat, team, I have now gotten into a put. I have now entered a put position. My risk is going to be a break over resistance at the 693 area, a close over that area.
Why would you join the algos? They're playing a different game than you. That turns out to have been sage advice. The S&P 600 small cap index is the belle of the ball year to date, up 8% versus just 0.5% for the S&P 500. I absolutely love this tape. I know Jenny does. I know Jim does, because it has nothing to do with data centers. Literally nothing. What's happening this year is really exciting. You've got transports in the lead. When was the last time we've been able to say that? You've got the small cap trade working, which touches a whole host of sectors that, again, are not data center related. And you still have semis doing well. And now you have energy has decided to wake up. And again, a lot of these were areas that were left behind last year. A lot of them are under-owned. A lot of them are lower multiple, have tons of room to run. And that's without even knowing what the earnings will be in Q4. They haven't even reported yet.
Right.
But the multiple is lifting because people are looking elsewhere from Oracle and Microsoft. They want to do something else.
It is January 22nd, and the Russell 2000 is up 10% year to date. That's unbelievable. The transports, which Josh was talking about, which Ed Yardeni is writing about today, by the way, he'll join us on Closing Bell today, so you'll hear more from him on his outlook for the markets. Only 4% away from its previous high, which was on March 30th of 2022. If you believe, of course, in Dow theory, then this transports breakout is very significant. This is, in many respects, what it was last week. The idea of a run-it-hot economy. That's why we asked you, and we talked about, in the face of that big decline on Tuesday, whether you should ignore the noise and focus on the fundamentals. The fundamentals that David Solomon, who runs Goldman Sachs and was with our Squawk Box team in Davos this morning, said are this.
I think we're set up where we have the possibility for a stronger growth trajectory for the next few years. We're set up for that. That might not happen. A bunch of exogenous things could soften it, but I think we're set up with a better possibility for that than we've had in quite some time.
That seems to be the view. Charlie Scharf, CEO Wells Fargo, says the same. It's more likely than not that growth will be stronger than people expect, which is why the sector sort looks like this. Materials up 9.25% to start the year. Energy up 9%. Industrials up 7%. It coincides with what the Russell, Jenny, is doing as well as the run it hot and tune out the noise continues.
Right. So to Josh's point before, yeah, I'm loving this market this year. It's a lot of fun, but I look at it cautiously too. And so if we're going to go back to the beginning of your comments, Scott, and focus on transports, I just think it's interesting because when I look at our transport holdings, we've got JetBlue, XPO, Uber, and UPS. None of those companies have anything actually in common with them, with each other, other than maybe that oil, gasoline is a large input cost. And so really I look at it as a much broader market rotation.
Well, they do have something in common. They're all reliant on a good economy.
Fair
good
enough.
economy,
Okay.
and even better than what people thought, like the Solomon Scharf perspective, helps a UPS, it helps an Uber, it helps a JetBlue, and it helps XPO.
But you know what? We had a great economy last year, and those guys totally.
We're going to
lagged.
have better growth than we did.
Okay. Point is, they completely lagged last year. So even with a good economy, and they do need that, they did nothing last year. So this is just more to me like a comment on market rotation, a comment on people changing their positioning. It's interesting. I mean, you take like a UPS, for example, right? It's down 17% over the last 12 months. It's up 11% year to date. And you look out on that, and okay, it trades at 15 times earnings, but the earnings growth for UPS isn't amazing. It's just not terrible. And it's in the middle of a transition. People are finally giving the middle of a transition some like positive hope rather than you're not AI centric, we're ignoring you. So it's just this kind of like thematic thing that I'm seeing across the portfolio, across the market. To me, it's encouraging. I like the breadth. Everyone does well if it's a positive economy. It's nice to see these guys participate.
Yeah. Care. We're at 49,500 on the Dow. So again, we said we're back positive on the year. And we haven't gotten everything back from Tuesday, but we are working our way with it, towards that direction.
So here's a comment that I think is relevant to a discussion of indices. The S&P has 40% weight in a handful of big cap tech names, tech and communication service names. One of them, NVIDIA alone, which is as large in terms of market cap of the 300 smallest names in the S&P 500. If you go from number 201 to 500, all of them fit into NVIDIA. So those $8 trillion worth of market cap can move a lot if you get a few points that come out of Meta or Microsoft, which has been happening, or NVIDIA over the past few months. That can really push hundreds of names that are outside of the, $1 trillion or $100 billion club, which is a great thing for people who have broadened their investments, have diversified their portfolio, like the people on this desk. What you might find is that the S&P does very little this year, but these other indices do a lot. They can be double digits, they could be up 20%, and you could have the S&P up 2%.
Don't you think it's interesting, Jim, if you look at over the last 12 months, okay? The Russell slightly beats everything. The Russell's up 18.6% over the last 12 months. In this age and era of AI, where everything seemingly is about that, where that trade, for better or worse, has dominated a lot of the conversation and a lot of portfolios. But that's pretty remarkable when you think about that fact that over the last year, the Russell's up almost 19%, and it beats everything else.
Yep. And, Scott, and we all know that the market likes to anticipate. It always anticipates. So what is it anticipating? It's bluntly anticipating much better growth in earnings from small caps. And by the way, the other 493 stocks outside of the Mag 7, much better growth rates than we've seen over the last 3 years. And frankly, we're going to see a deceleration of the AI stocks earnings growth rates. That's the signal. You talked earlier about noise. There's a lot of noise out there. For fundamental investors, earnings is the signal. Now, I'm not saying, by the way, that the AI stocks are going to have lousy earnings, but if you take a look, just as an example, at Alphabet, it more than doubled its net income and earnings per share over the last 3 years. It's really hard to keep that pace of growth going. So it and the rest of the AI stocks may do 15 to 20% earnings growth this year, but guess what? The other sectors, financials, industrials, maybe even energy, are starting to pick up to match that in the projections by the second half of this year. And that, Scott, is why I think the small cap sector, and by the way, the RSP also, is outperforming.
How about this? From the fund manager level to the retail level, there's a level of bullishness that really hasn't been seen, I don't think, to this magnitude in some period of time. Bank of America's latest fund manager survey is the most bullish in 4.5 years. Cash levels are at record low. Protection against equity correction is the lowest since January of 2018. And investors are the most overweight stocks since December of 2024 on the retail side of the ledger. Retail investors continue to set new records this year, according to JP Morgan, reaching an impressive $12.9 billion this week. This level is comparable to last year's Buy the Dip episodes, but unlike those prior episodes, which faded quickly, the current new year momentum has been sustained and has now pushed retail activity to an all-time high on a rolling monthly basis. It's almost like no matter where you look, people are positive on this market.
Yeah, and I think a lot of these sentiment surveys and polling of fund managers and positioning, I think it's important to remember, for the most part, what these are concurrent indicators. They basically describe the conditions as they are right in that moment. And they can turn really fast. You get 2 weeks of negative closes for the S&P 500, and you'll see that bullishness drop right back down. It's perfectly normal. By the way, at record highs, the Dow close to 50,000, why wouldn't people be bullish? Would they be bearish? So like it's almost like it's a tautology. But I want to go back to something that I think is really important. One of the main reasons why the small caps are rallying here and why it's hopeful for the overall market, the big question of 2025, if you guys remember, at least the second half, was, is there a bubble in the AI data center build-out theme? Is all of this spending wasteful or excessive or about to kick us in the ass? And the obvious answer to that question is we can only answer it if we see smaller companies who are the customers of AI, the users of all that data that's being housed by Meta and others, if they have a concomitant increase in their earnings outlooks, then we know it's not a bubble, because that earnings growth can only come from productivity, which obviously will come from a few things: lower energy prices, lower cost to borrow, but the usage of AI, the greater penetration of AI workflows in their businesses. So the only way we can say it's not a bubble is if we see what we're seeing in the small caps, and it's really encouraging. They're the buyers of all this technology, and if it works for them and we're raising earnings outlooks for these companies, then no, it wasn't a bubble. And God forbid if we don't see the increase in Russell 2000 company earnings, then we do have to worry about that question once again.
Great point. I think it's the next big leg of the AI story, to Josh's point.
The users.
What do you mean, the users? It's all about the users.
Small cap stocks
this year to see the impact on their earnings.
No, you're going to see.
Small cap stocks have a 5% profit margin versus S&P is more like it's going to be 14 or 15 this year. This helps explain
the productivity in many respects.
Here's the problem.
Don't you think so?
I think the problem is, like, productivity and efficiency is great, and then you hit a very thin line where are people using it and becoming so productive and so efficient that you don't need to hire. And so there's a thin line between when this hiring is when this productivity is fantastic and when it starts to cut in the other direction.
Yeah, when you don't need the people who
are
there already.
And so hold on.
They're not hiring college kids.
Dude,
we're there.
Dude, we're not even close to there. You have seen nothing yet. All the job losses that you saw in 2025 were just we're
not saying losses. You said people don't need to hire. We're already seeing that in the data.
We're seeing
companies are low fire, low hire today.
We're like the first batter of the first inning in terms of what AI has the potential to do to job loss. We are too early to know where that's even going. I think all the weakening in the labor markets that you saw last year, that was just an excuse pointing to AI because they overhired during the pandemic.
Correct.
There's no cushion now. And what could happen is all this wonderful productivity that's awesome for corporate earnings could end up being very negative for the economy if you have millions of 18 to 24 to 40-year-olds.
That's a 27 or 28 story.
Okay, but
the 26 story, we're already seeing it.
Josh, but you know perfectly well the market looks out 6, 9, 12 months.
I agree, but Jenny, my point is this. It doesn't have to be one extreme or the other. It doesn't have to be 50 million layoffs or there's no productivity gain whatsoever.
I think
the answer is in the middle.
I think it's, all right, and I agree, but I think it's going to be a slow and insidious creep. So what Carrie said, Scott, when you said, all this positivity, Carrie turned, she's like, this isn't good. I said, I agree. When is it ever good? When everybody agrees on positivity.
The risk for all of us is that AI actually is a bubble and all these stocks are inflated. I don't think that's the case. Look, we see the effect on a lack of hiring, but if you look at the U.S. Census Bureau, which does these monthly surveys, and then from January this month, companies with 250 or more employees, big companies, 33% of them are using AI right now. If you drop that number down to 20 to 50 employees, I use that as an indicator of small businesses, that 33% drops to 18%. What that tells me, those numbers tell me two things. One, small businesses haven't used it as much as big businesses. Makes sense, right? Does a pizza company, I'm being facetious, but does a pizza parlor really need AI? No. But those numbers, 18 to 33%, tells me there is so much more penetration to come, and there is money to be made in the AI stocks.
I feel like, to that point, I feel like the market is going to anticipate and move more and sooner on the corporate benefits of all of this new technology over the societal impact from the stuff that you are talking about.
Totally agree. What I worry about is how much of that corporate positive impact is already priced into these stocks. Because
Josh's point is that it's not priced in.
Right. Maybe he's wrong.
Almost at all. How can he possibly be wrong? We're just at the cusp. Can I finish? Thanks. We're just at the beginning of thinking about all of these other companies and industries that are going to be impacted by all of the hyperscaling and all of the innovation that's coming from AI. How can that already be in the stock market?
Because there's an interesting chart, which I'll put up on my Twitter, where it shows it takes all the like a bunch of different values. And compares the market to like all the way back to the 1920s. If you use a pile of different valuation metrics, this market is more expensive than it's ever been since 1929. And when I see that, I think a lot is priced in.
Why don't you just think that the earnings are going to be really good, multiples are going to compress, and the stock market's still going to go up like it has in similar periods of multiple compression and good earnings throughout bull market history?
And this is why I'm mostly fully invested, but I'm not totally. And what we all know is no one rings a bell at the top, but we know that we're at a
You know what else set record highs? Though, honestly,
Columbia Bank shares?
No, the amount of wealth in America is at record highs, and people need to own stocks. Hang on, and profit margins. So we're going to compare stocks in 1940s when they were, I don't know, smelting copper, to the stocks in 2026. Like it's apples to oranges. I would rather buy it at 16 times earnings if I could. But that's not the hand that we're being dealt right now.
That's not what I'm saying. I'm not saying you wait to 16 times. I'm just saying with rich valuations, some huge amount is priced in. I know Carrie's like crawling out of your skin.
12 times earnings in small caps is rich.
So I just want to make a comment, because there is an industry which I think is on the cutting edge of what AI could do, which is biotechnology. And last year was a very, very big year for biotech stocks. I have said on this show many times, they're the ones that ought to be able to use it in order to find the targets and design the molecules and get clinical trials moving fast with the right group of patients. Have any of them done it? We're waiting for somebody to say, Biden to say, oh, our new drug that's at the FDA for approval was designed through AI, was created through mechanisms that use the technology.
It probably will not be the first place it shows up.
But I'm
it takes
just
a
saying,
long time.
If the stocks move 30% because of AI, some of it may be in the prices already, right?
All right. So, speaking of things that are maybe already in the price, I don't know. If you look at some of the mega caps, there is Alphabet, which sticks out like a sore thumb. It was amazing last year, and it's up 6% year to date. It's far and away the best performing of the mega cap names. Gemini 3 has been widely regarded as maybe an enabler of this company not going to some of the dark places that others have expected that they might. You trim the stock.
Correct.
Because of the incredible run that it's had?
I mean, last year we added to it, and it was selling for 16 times earnings at the beginning of last year, because everyone was afraid of DeepSeek. I mean, who even remembers what they were afraid of? But the stock traded up to 28 times where it is now. It has grown to be a very big part of our portfolio. You know, when a name gets to be close to 10%, we cut it back. We cut it back a couple of times, and we did a little bit more cutting. That does not mean we're out of the stock by any means. We're overweight. It was just a trim, but it's because of valuation.
Can we discuss what's happening with Apple, please? The stock is on pace for its 8th negative week in a row. That's the longest streak since 2022. Everybody knows why the stock had lagged, and then the stock had a huge run, which we can look at rather than that intraday, please. on the hope and expectation that what was missed was going to be corrected, that they were going to get AI right. There's the chart. Underperformance and then big ramp up on their, come on, this is Apple, they're going to get it right. They get everything right eventually. They may not be first, but they're usually best. And they're going to figure it out. What in the world is up with this name, Josh? What gets this thing moving again?
Look, I think the iPhone unexpectedly was a hit, and it's the first time in a while that we've been able to talk about growth beyond just a replacement cycle. I think that's super positive. When you look at some of the legal challenges that people were worried about with this name, they seem to have come out okay on the other side. There are still overhangs here, but they're even doing better in China, and that was something that people were wringing their hands about. So, look, I think it's a very large stock. It can often be used as a source of funds. A lot of times you'll see it come down for no apparent fundamental reason, and then all of a sudden just reverse. Sometimes that's because Berkshire Hathaway is liquidating more of it, which may be the case here. They've been net sellers for a while now. There's a lot of reasons why you could see the stock sort of coast lower, but context matters. It made a new record high. So this sell-off didn't start from the name being in a 10% correction. It made a new record high, and now we're witnessing a pullback, and it's fairly ordinary, fairly gradual. The stock is nowhere near any critical long-term trend level or moving average. And, in the end, I still think this is a business that buys back a ton of stock this year, has decent earnings, not blow you away growth, but investors are willing to pay up in multiple for the reliability of those earnings. It's the same reason Walmart, Costco, all of these stocks are selling at very high valuations because we care more about will the earnings show up than, oh my God, why aren't they growing by 20% anymore?
But that's an interesting point. When you say they pay up in multiple, this is the question that we always ask. What is the right multiple? So when I look at Apple here, I see this year, next year, the following year, 11 to 10%.
You've hated this stock for a long time.
Because it's boring and it gets more attention than it should, and it trades at 30 times. What's the right multiple? Is it 23 times or is it 30 times? Because then I look at NVIDIA.
Extremely high mode services business.
But I look at NVIDIA, 24 times earnings, 50, 60%. So why should Apple not trade at NVIDIA's multiple, which is still a premium?
I'll give you an answer to that question, and I own both.
Okay.
I'll give you an answer to that question that I think is the right answer. And maybe it's not. This is what I think. NVIDIA is highly reliant on this very specific theme, the AI build-out, and always having the best chips and fighting off now a lot of competitors, which did not exist 3 and 4 years ago, okay? They had the whole thing to themselves, and now they don't. And we're unsure if the pace of data center build-outs and GPU purchases will continue. With Apple, it's a totally different story. It's will the consumers continue to upgrade to the next iPhone?
But even if they do, you got 11% earnings growth.
But that's what investors want. But investors are not betting that 11 goes to 15 or 20. Investors are betting the 11 comes in, the float shrinks, there's a small dividend there, and they could sleep at night. It's a different bet. NVIDIA is not that bet.
I think Apple gets a premium because people like my mom can look at a phone and be like, I understand this.
Yeah, well, that's what I just said.
Right, but I still don't think I don't think that counts for 10 multiple points. Or I don't think it should count for 10 multiple points. So when we see it fade...
Should? When was this business ever about should?
That's a fair point.
All right, well, let's get to another move before we take a break. Is it a hotly debated stock, Oracle? Maybe that's a poor description.
It's quieted down, hasn't it?
I don't think so. Yesterday or the day before, it was down like, it was down like 4 or 5%.
Oh, yeah.
I'm not talking about on the Tuesday. I'm talking about, there still seems to be many, many questions about what's happening here.
Right.
Stocks, CDS. Like, you can't look at one without looking at the other. Until you stop having that conversation, then you get where I'm going, then it's still going to remain an issue.
Great setup, thank you, because you just laid out why I'm buying it in my personal account and not for clients. I think it's stopped going down, but Scott, that was a great setup for the simple fact that I've got more risk tolerance than my clients.
Trying to butter you up, Judge.
You know something's coming. Something's lurking.
No. You know what's coming is as I'm saying this.
Got that nice British-looking suit on. Something's coming.
As I'm saying this, I want Josh to think when I'm done what word you would use to describe the stock chart. But let me start by saying this: all of the concerns about AI, the debt financing, whether OpenAI is good for the money in general, whether it's a bubble, is all focused on this stock. And at 23 times forward earnings, I'm willing to say that I think it's cheap enough, at least for me, to take another slug of it into my portfolio. Not ready for clients yet because I'm not sure it's done going down. Those questions
about that. So,
will you tell me what word you would use to describe the stock?
I met one of your.
You're going for punishment.
I
would call it crash-tastic. It looks like they just launched a Bitcoin treasury 6 months ago. I had lunch with.
Which is why I don't have it.
I had lunch in the same room as one of your colleagues. She didn't come and say hello. We were at the B-REIT luncheon at Osteria Del Bianco.
Yes.
Phenomenal bolognese sauce. One of the big issues with the data center build-out and the question about, well, who are we building these for, is Oracle going to be able to maintain its investment-grade rating? My question is, okay, you seem to think they will. What happens to the stock if they don't?
Well, then it's a disaster. Again, why I'm buying more for myself, not for my clients.
You would change your mind on it if that happened, because it would be a gap.
That's going to be. It will make a big problem for them raising further financing. But so yes, that worries me. But I'll tell you what the bigger worry is to me: whether OpenAI is good for the money. And frankly, that should worry everybody, whether you're buying Oracle or Nvidia, anything in this space. It does seem to come down to the epicenter is OpenAI. Now, Sam Altman, the CEO, is over in Saudi Arabia right now trying to raise $50 billion at I believe, a $500 billion valuation. $50 billion is a drop in the bucket relative to the $1.2 trillion that they've committed to spend.
$500 billion was so last year, dude. Like,
500 trillion.
Come on.
Okay, well, they are trying to raise $50 billion. The point that I'm driving at is they're raising funds. They actually have contracts that they've been signing to bring in revenue. Yes, it is still a question. This is still a risky stock, and that is why Oracle debt trades at approximately 100 basis points or 1 full percentage point more than, say, Meta or Microsoft. Okay. On the other hand, it trades below 6% yield to maturity. So to your point, that's not a distressed level. I don't think they're going to lose the investment grade.
Triple B now, I think. I mean, that's like that's got to be.
Yes, it is not without risk.
That determines, to me, that determines whether or not there's a door in the floor.
It is not without risk.
Be the floor.
And you know, and I know, and everybody knows, you cannot get return without risk. There was risk in Google when Carrie and I were defending it about 8 months ago. There was risk, real risk. We talked about it.
All right. You know and I know that we need to go to break. That's what we're going to do.
Good chat, though.
Okay?
Thank you. I'm glad we had this.
It's my pleasure. My pleasure. All right, so we'll take a break. We will come back. I got a couple of moves in front of me to tell you about that Carrie has just made. We have some interesting calls of the day and other committee names that are on the move, and we'll do all of that ahead. back. Let's do these moves from Carrie that I mentioned going to break. A couple of sales, Intuit and Booking Holdings. Why?
I think there's a common thread there. Both of them are software type companies. I'd call them software companies. And both of them,
would too.
And both
Fair
of
point.
them, you know, one's in travel and one's in tax returns. But
Say
they're
tax, so negative. Tax.
I think of it that way. But I think they're being affected and disrupted by AI. People are using AI for their travel plans, and people are using AI in various forms of AI. It's very helpful for tax returns, so you don't have to hire Intuit or any of its software. Not that we've seen a crack in Booking's earnings. Booking's been an incredible stock for us. It's up 200% in the last 5 years. Intuit, we bought low. It hasn't done anything. Everything we've heard from Intuit sounds as if it's going to be a tough slog over the next year plus. And so we've just decided that we took our profits with Booking. We have other places we feel that we can deploy the assets, and Intuit, you know, we took a little loss, and we're okay with that.
Okay. Let's talk about this call that Goldman has on gold, which has been unbelievable, obviously. So Goldman's raised its year-end 2026 target to 5,400. It was 49. It's about at 49 now. All right, so we'll continue to watch that, right? No one owns gold, but the
I own gold and minor exposure. I think the thing to say about
the GDX. What do you have?
The thing to say about gold.
We know.
Okay. The thing to say about gold is that it trends. And trends over multiple years. And every time it goes on one of these runs, of course, people say to themselves, well, I can't buy it now. Look what it just did. But that misses the point that it's very different from a lot of other commodities. It doesn't oscillate up and down, with a given baseline. It's a whole different animal. And this could go on for 10 years. We've seen it
Josh,
before, you could see it again.
You also know, that it goes through periods of time longer than 10 years where the trend is absolutely zero.
It just did.
It just, I mean,
right.
Just
it just did.
Caveat emptor. I mean,
no.
I got
the
you.
high
The
on gold was
trend is
2011,
higher right
and
now.
it didn't start rallying until 2021.
Yeah.
De facto, 10 years of misery, but that is why it works, because you're taking
I grew
risk.
up in this business with the original gold bugs after we, got off of the gold standard, post-Bretton Woods, everything with Nixon. And they, these guys went through the 80s and 90s making no money in gold, no yield. I'm not saying you're wrong, because the trend is clearly higher right now. I'm just saying, do be careful about buying at this price.
Isn't it in some respects a hedge on like erratic policy making,
Totally. There's
what inflation may do on the other side of some of all this, and as long as there's a bid in both of those, so to speak, that gold's going to have a bid, right? What would reverse this trend higher? That's what I want to know.
There's an interesting chart that shows gold, silver, and then Bitcoin. And you see in September when things started to get kind of wild, you saw the kind of risk off take the wind out of Bitcoin, and you saw that risk off and nervousness really give gold and silver another leg up. So Scott, I thought it was interesting at the beginning of the show when you were saying there's all this enthusiasm, all this bullishness by the fund managers, because what I'm seeing at the client level is that's not there. And I had a conversation with a client yesterday.
Your clients aren't bullish?
No, they're nervous.
Maybe their fund managers making them
No, I don't think so.
less bullish.
I don't think so, but I had an interesting client.
You don't think that has anything to do with it?
No, I think maybe some people are coming to me because they're a little bit nervous. But listen to this. So this guy said, hey, let me take my dividends out, and whatever I don't spend, I'm going to go to the coin store and I'm going to buy gold. And I said to him, you know what? It's probably overvalued. And he said, you know what? I don't care. Because if things go really bad, and this guy is no doomsdayer, but he said if things go really bad, it just makes me feel good.
Tell him to buy bullets.
By the way,
what he's really doing is just taking a little bit of risk off. It's like Carrie trimming the Google, right? It's saying hey, it's up a ton. I'm going to take a little risk off, put it in my pocket. In this case, he's buying a gold coin.
By the way, it feels like it's risk on. I mentioned that because now, remember, when we came on the air, I guess 34 and a half minutes ago, I said, well, the Dow's at 49.5 just about. Well, now it's at 49.6. And you're better than 500 there. Let's throw up the S. Can we show that? And let's show the S&P too, which is now pushing 69.40. Remember, we were trying to get everything back from Tuesday's sell-off. So there you're at, above 69.30. That's the highs of the day there too. So we continue to work our way back as if Tuesday just never happened. Let's get the headlines now with Courtney Reagan. Hey, Court.
Hi, Scott. A winter storm is set to begin tomorrow, stretching 2,000 miles from the Arizona-New Mexico border to upstate New York. The storm is slated to start in Texas and Oklahoma, with heavy snow hitting the Northeast by Sunday. According to the National Weather Service, 132 million people are under weather threats. In the New York City area, latest snowfall estimates for this weekend are 8 to 16 inches. Get your sleds ready. The U.S. and China have signed off on a deal to sell TikTok's U.S. business to a consortium of mostly U.S. investors. According to Semaphore, the deal is set to close this week. The new structure leaves ByteDance with under 20% ownership of the U.S. business and 15% for Oracle, Silver Lake, and MGX, the state-owned investment firm in the UAE. And President Trump could start flying in a plane donated by Qatar as early as this summer. The U.S. Air Force confirmed it will deliver the jet for use as Air Force One within months, though the exact date hasn't been determined. The latest development comes after Trump's flight to Davos on Tuesday had to turn around mid-flight because of an electrical issue. Scott, back over to you.
Okay. Court, thank you very much. It's Courtney Reagan. Coming up, is now the best time ever for retail investors? We asked that question the other day, and now we want to get the committee's take because there's a surprising stat in one big name earnings report that has us asking that question yet again today. We're not going to go to break quite yet just because I know you want to know about this. BitGo Holdings looks like they just had their first trade. It's an IPO here. It is a digital asset infrastructure company, and it has just opened on the New York Stock Exchange, and we will follow it. It opens up by about 18%. We're back after this. Welcome back. Breaking news out of Washington. Our Eamon Javers has it for us. Eamon, what do we know?
Scott, President Trump has filed a lawsuit against J.P. Morgan Chase and Jamie Dimon personally over allegations of debanking of Trump-related bank accounts during the period of time that the president was out of office. This is a suit for as much as $5 billion filed by the President of the United States and a number of Trump entities against J.P. Morgan and Jamie Dimon as an individual. And we have a statement here from J.P. Morgan just within the past couple of seconds. They say, while we regret President Trump has sued us, we believe the suit has no merit. We respect the president's right to sue us and our right to defend ourselves. That's what courts are for. J.P. Morgan Chase does not close accounts for political or religious reasons. We do close accounts because they create legal or regulatory risk for the company. We regret having to do so, but often rules and regulatory expectations lead us to do so. We have been asking both this administration and prior administrations to change the rules and regulations that put us in this position, and we support the administration's efforts to prevent the weaponization of the banking sector. That's an on-the-record comment from J.P. Morgan spokesperson Trish Wexler, Scott. So this lawsuit is a 56-page document. We're going through it right now. The gist of the argument is that this debanking was improper and due to political reasons. That's what the president says in the filing. And we saw, Scott, Jamie Dimon, very outspoken in Davos, being one of the few CEOs to go public with criticism of the president over the immigration enforcement issue, criticism of the enforcement operation more broadly. And so this is a flashpoint of tension now between the President of the United States and one of the most powerful bankers on Wall Street, Scott.
All right, we'll follow that. Eamon, thanks for the latest there. That's Eamon Javers. Charles Schwab, that's the stock we want to talk about now because it is getting a bunch of target hikes today following earnings. Target to 138 is the high on my list, but you've got 128, 124, and 120 and 121, excuse me, by a number of firms. Here's something, though, in the earnings that really interested us. Schwab is seeing robust engagement with younger investors, noting that nearly 60% of new retail client accounts opened last year were under the age of 40. The average age of new Schwab clients has fallen by 10 years in the last decade. Josh, I'd like your thoughts on that trend. And also, as we asked the question the other day, and we bring it up again, whether now is the best time ever to be a retail investor. You have more opportunities to play this market than you have ever had before.
Yeah.
You have the New York Stock Exchange just talking about 24/7 trading of tokenized stocks. You have the NASDAQ moving to almost 24 hours as well. Robinhood is a thing. You have prediction markets, etc. How would you assess that question?
I do think it's a great time to be an individual investor, and I think Schwab in particular has done a very good job at looking at its investor base and asking itself, how do we reach the next generation audience? Rick Wurster deserves a lot of credit, the CEO, and this is a company that just 2 years ago we were worried about things like regional bank blow-ups and some of the stuff with cash sorting and money being pulled out quicker than these companies had time to figure out what to do about it. And all of that is now gone, and now we're focused on what we should be focused on with Schwab, which is earnings, revenue, customer acquisition, etc. And they're doing a good job. I do think there's a wrinkle in the good time to be an investor story, which is there is a lot of choice, and not every choice is a good choice. And there are a lot of distractions and side quests and a lot of circus activities happening alongside normal investing and trading. And it just means that people have to learn from their own mistakes, be a little bit vigilant and be on their guard. But I don't really see when that would ever not be the case.
So I would say that Charles Schwab and all of the other institutional platforms owe a lot to two things. One is the pandemic, which gave people a lot of time to work out how to use their phone to trade stocks, how to understand different platforms, and also Robinhood, because Robinhood really democratized the idea of trading for everyone in the country. So yes, we own Schwab. We have for years. We love what happened in the quarter, but I think this is a phenomenon that continues.
Yeah.
We talk about this so far from the perspective of individual investors using Schwab, but there's another important client base, which which is the four of us in the registered investment advisory business. Now, big phenomenon over the last 10 years is the big companies in the RIA world are getting bigger, whether it's by organic growth or by acquisition, but it's happening. And when you do that, when you get bigger as an RIA, you want to have the trusted custodian, the company that always gets it right. That's why Schwab is our most trusted custodian. We also use Fidelity. But yeah, no, we use Fidelity too, but Schwab is the go-to if you don't want to have any mistakes as you're trying to grow.
I feel like, too, honestly, that the retail investor is smarter than it's ever been.
I agree with that.
And they've had to be, as more of these choices and different asset classes have opened up to them, and more risks have emerged.
Well,
they've had no choice but to be.
Yeah, but they also have information.
Well,
They have
but that's what I mean.
available.
That's
Yeah.
part of why I
incredible.
think they're more educated about the markets and smarter about them than they have ever been, because there is more information out there to help school yourself on a lot of different things. We obviously try and play a role in that too.
Can I say one last thing?
Real
Schwab?
quick, you
Okay.
can.
So the great earnings report, right? Great numbers. But the thing that matters most, besides all these stories, aside from all these, is the numbers. This thing's amazing. And when we think about interest rates potentially coming down, that goes straight to Schwab's bottom line. So they actually saw their net interest margin grow a lot. And they've got 17, 18% earnings growth ahead with a 17 times multiple. Like, that's really all I care about.
Okay. All right, we'll take a break. We come back. Josh Brown is ready with his best stocks in the market list. There's a new name that just hit the radar. We'll tell you what it is next. All right, let's do it. Best stocks in the market according to Josh Brown. The spotlight today is shining brightly on what name?
First Solar, and this is not ready for entry yet. I'm putting it on your radar before it happens. Can we go back to a forever chart? Company came public in 2006. It's up 800-something% since it came public, but all of that gain happened in the first 2 years and the last 2 years. This has been a horrific long-term. Look at this. Can you imagine holding this since the IPO? So this has been a very, very unique situation, but I think it's on the cusp of challenging that old 20-year high. Really good things are happening here fundamentally. Earnings per share growth should be about 50%. Revenues are growing. There's a massive $16.4 billion backlog, and it is now a very different company than it was the last time it was at these levels. This is now very heavily focused on utility and industrial grade solar, not putting panels on people's houses. I want people to watch for a break above the 50-day moving average as your first clue that the buyers are really in control here and could take this back to the old highs. It could be absolutely explosive if and when it breaks through.
Full disclosure on this, KeyBank today reiterated they're underweight. Their sell on First Solar, they say this time is not that
Listen to this. Listen to this.
It's that different.
You have a price target at 150 and you have a price target at 350. The analyst community does not know what to make of this stock, so I'm going to focus on price over commentary.
All right, Santoli is next. All right, you know him as the senior markets commentator. We know him also as the anchor of Closing Bell Overtime, the co-anchor. It's good to have you. Off to a good start. This market, too.
For sure, yeah. No, the market's kind of answering the challenge, trying to prove that what we had was just kind of a shakeout from a phantom threat and not necessarily something that was really going to change the macro picture. You mentioned the S&P kind of on the verge of regaining what was lost going back to Friday's close, about 69.40. Yields have come off in the last little bit too, and in the last 24 hours, the Kalshi odds of Rick Rieder being the next Fed chair nominee is up 10 points. To like 34%. Who knows if that's, something that's reliable, but it might just be in the market and the way it's trading. Also, the Mag 7 type stocks relative to the rest of the market did really get pretty stretched to the downside. I would say there's an acceptable bounce in those names today, something like Microsoft up 1% after looking awful. Doing its part, I don't know if you could say that the bleeding is over in software or in kind of the OpenAI verse, but I do think those are relevant observations too. The one thing that gives me pause is the market action so far year to date is pleasing too many people. Everybody wanted the broadening. Everybody wanted the regional banks. Everybody wanted the cyclicals to work, and they are. And I just get uncomfortable that way, even though it could last for a long time.
Yeah. All right. I'll see you on the Closing Bell.
Yeah.
That is Mike Santoli. As you know, by the way, we showed Meta up 5%. Jeffrey's saying to buy that dip today. And that is, wow, that stock is outsized gains today. We'll do finals next. Three o'clock today, Closing Bell. We're going to kick it around with Ed Yardeni, Chris Toomey, Rich Clarida. Interesting time to talk to him, obviously. Stacey Rascon and Bryn Talkington. I hope you'll join me then as we chart this last hour of what seems to be a pretty darn good day on Wall Street yet again. Gentlemen, Jim.
Your Honor.
What's your final trade?
Vertex Pharmaceuticals. A nice little chart here over the last few months, up about 30%. I think it continues.
Okay, thank you. Jenny.
All right, Kimberly-Clark, 5% yield, really oversold, and it looks like the whole concern over the Kenvue and Tylenol is starting to fade out of the share price in a positive way.
Okay. S&P Global.
Yes, so S&P should really benefit this year from strong debt and capital market cycle pickup.
JB.
We highlighted the breakout in Exxon off the best stocks in the market list in November and again in December. That stock is now materially higher. I remain long personally. I think we could see 150 this year.
Okay, so we are better than 500 on the Dow, and we are better than 6930 on the S&P. I'll see you at 3.
Thank you very much, Scott. From magnificent to malevolent, memory momentum as SanDisk goes green, and will influencers nail this trade? That's all coming up this hour. Welcome to The Exchange. I'm Kelly Evans, and we're hanging on to a rally here as the S&P comes off its best day since November. The Dow still up about 500 points, and the Russell continuing its outperformance against the major averages for 14 straight days now. This Russell 2000 is up 1.3%. The metals trade still going strong, even as geopolitical tensions ease somewhat. Look at gold. It's now shooting above $4,900 an ounce for the first time. We had people with 5,000 price targets for year end, and we're approaching these levels every day. Silver back in the green. It's up to 96. Oil reversing lower, though. WTI trading below $60 a barrel with a 2.5% drop. We also have a crypto IPO today. Even as Bitcoin's back below $90,000, the crypto company BitGo is up 28% now in its debut, and the CEO will join us just ahead. But let's turn to the tectonic tech shift that's been happening in the markets lately, as the Mag 7, the darlings, have gone essentially flat. Outside of Google, most are just treading water over the past 3 months. Nvidia up 2%, Apple down 5%, Meta and Microsoft down 13%, and Amazon up around 8%. What's taken over is memory and storage. Look at these trades here. SanDisk is up 237% in 3 months. Micron has doubled, so has Western Digital. But this sector has traditionally been cyclical in nature, trading on the whims of the computer refresh cycle. So is this time different? Let's ask CJ Muse. He's the senior analyst at Cantor Fitzgerald covering the chips and memory space. CJ, it's great to have you here. This morning, Jim Cramer was looking at SanDisk down 4.5% and saying, is this finally a canary in the coal mine that the trade is running out of steam? But then this afternoon, the stock is trying to break positive.
Yeah, no, I mean, I do believe that this cycle is different. From a NAND perspective, where SanDisk plays, we've been in essentially a 7-year down cycle. And so there's no urgency from any of the NAND players to add capacity. And when you layer in the incremental growth from AI, I think we're going to be undersupplied for all of 26 and 27. And so what does that mean? Tremendous earnings power. SanDisk will report next week. And we've been writing in our notes, who will be first to $50 of annualized earnings, SanDisk or Micron? And quite frankly, it's a toss-up. But, SanDisk is right there. And if you look at the March quarter, Street's modeling about $4 of earnings. And, if you put in some of the crazy pricing that we've been hearing for Q1, they could, earn as much as $10 or $12. And when you think about that seismic beat in the world of semiconductors, I hearken back to Micron in December and, Nvidia 3 years ago for that kind of, material beat to numbers. And, in that world, it's hard not to want to be there. So, we've got buys across Seagate, WD, SanDisk, Micron. We think the group continues to move higher.
Are we going to have shortages that affect the everyday consumer? And look at those price surges that we've seen in the last couple of months. Are we going to get in a situation where, you walk in to buy a laptop and they say, we don't have one, or the price doubles?
100%. I would tell you that our working assumption right now is that PC unit volumes will decline 10% this year, and that smartphone unit volumes will decline at least 5%.
Because there's not enough chips?
Not enough memory. And so what you're going to see is at the high end, higher prices, and at the low end, you'll see despeccing of memory.
Wow. I mean, do you think this partly explains why an Apple, for instance, has been underperforming in the model, which is all about selling iPhones? Are they going to be memory constrained or no?
It's hard to say whether they got in line. We hosted a dinner with Micron a week ago, and they talked about, for certain customers, unable to provide 30 to 50% of what those customers want. And so it's unclear exactly who it is. But what is clear is, if you didn't get in line in the last 3 months, you're going to have a problem this year. So I think, this earnings season, particularly for the PC and smartphone supply chains, that's going to be a major theme. And you're going to see real weakness on unit volumes.
That is fascinating. And I don't know if there's a big trade there. I mean, investors probably suss this out already. Would that be like a Dell? I mean, I don't know if people are trading literally PC volumes. What else is going through your mind in terms of who might suffer from the constraints that you're talking about?
So I think the PC constraints are well known, and so many of my clients, are long memory and short the PC supply chain. What I think is less well known is the pain that's coming to the handset market, and so we have less constructive view on the smartphone names, and in that world we cover Qualcomm. I think that's one that we'll see customers pushing lower down in their Snapdragon, which will weigh on pricing, and also I think unit volumes will be weaker. So clearly, I do think that is a place where we're going to see incremental weakness.
It'll be fun when this gets into the midterm. Something's going to happen where the midterms and political, something is going to happen here with everything that you're describing. So I'm very curious to see how that plays out. I mean, we have the $100 billion opening of the Micron factory in upstate New York, I think last week. That's not going to come online soon enough to cure this shortage that you're talking about. But what are the data points you're watching to know that this famously cyclical business is close to another top as opposed to still seeing a lot of kind of upside ahead?
Sure. I think it's key to remember it takes 2+ years to build a new greenfield fab. So nothing can solve this problem overnight. I will tell you that Samsung and Hynix are adding 175,000 wafer starts per month this year. That's about 8% capacity add. They're pulling that in by 3 months. However, that won't alleviate shortages until bringing on some supply in early 27. But again, when you think about the added demand from AI, particularly high bandwidth memory, as well as agentic-led AI servers, I don't see, this shortage being alleviated into 2028. And so, this is definitely a cycle unlike any other cycle I've seen. And so I do think that peak multiples will be higher this time. And I think peak earnings will not be 26, but 27. And that means there's still upside.
That is fascinating. Appreciate you laying it out very clearly, CJ. Thanks for the time today.
Thank you.
CJ Muse with Cantor Fitzgerald. Now, there are two bigger potential icebergs for this whole AI trade. One is that the willingness to spend at all costs for AI is going to fade. The other is that the fight continues even unto the death. Here's what OpenAI chair Bret Taylor said on Squawk Box this morning at Davos.
It probably is a bubble. When everyone knows that AI is going to have a huge impact on the economy across a huge range of industries and workflows, money is plentiful. Right. And what you end up with, smart money, dumb money, you end up with too many competitors at every layer of the stack. But I think that's good. Competition's good. It ends up with this culling effect where the free market determines who has the best products and where the most value is. And I think over the next few years, you'll see correction. You'll also see consolidation. But I don't think you can get innovation without that kind of messy competition.
Too many competitors at every level. What does this mean for the AI trade going forward? Let's ask Alex Kantrowitz, founder of Big Technology and a CNBC contributor. It's appropriate that we heard from OpenAI, Alex, as the number of people writing their obituary is quickly increasing. What would you say about that and how significant Gemini's arrival has been on the scene?
Yeah, I don't get the obituaries for OpenAI. I mean, the company only has 800 million weekly active users, the leading model or one of the leading models in this AI race, and a proven ability to show that it can get ahead of everybody else on product, whether that's being the first to release the large language model powered chatbot, leading in image generation, doing great stuff in video generation, and of course, working on an AI device. I don't think this is anywhere close to being over. Yes, Google has a good model. Others will have good models as well. I think a lot of this is about how you productize it. And from my money, OpenAI has been the best at that to this point.
This is what convinced me OpenAI will run out of money. That's a piece by Sebastian Mallaby in the New York Times. That's what I mean about how bad sentiment has gotten. But the argument seems, Alex, quite clear. Google doesn't have to monetize Gemini, right? OpenAI, meanwhile, has committed to billions of spend, is now pivoting to an ad-supported business model they said they wouldn't do except as a last resort. Where is their financial wherewithal going to come from? How are they going to fight Google in this race?
Yeah, it's funny. I was speaking with Demis Hassabis, who's the CEO of Google DeepMind, the company's AI effort, this week here at Davos. And what Demis said was basically it's a tell from OpenAI. The fact that they have to go into advertising is maybe an indication that they don't believe AGI or the super powerful artificial intelligence is right around the corner. Look, I think that is certainly a concern. On the other hand, they are a business. They do have to make money. They have all these users. It's like at a certain point, why would you leave the money on the table? And I do think that, if they continue to build on their lead and have this product lead, it doesn't really matter. At a certain point, they're going to figure out a way to make that money. And certainly they have an IPO that's probably going to come in 2027. That's my best guess.
Yeah, but their lead
and
is
they need to
eroding.
show some business momentum.
I haven't seen the latest weekly data, but it's clear that from the market share data, this was posted by a third-party firm this morning, the Gemini's rapidly gaining share. It's OpenAI's edge is, that's coming at their expense and the expense of some others.
Well, look, it's certainly a legitimate concern. Here's the thing. Google has this distribution advantage. They have all these products. They have Gmail, they have Google Search, and they can push their generative AI through those products and build users. So their user numbers are going to look very healthy. And OpenAI has to fight for every user. I think the argument that OpenAI would make, and I think this is a good argument, is if you're going to bolt AI on to existing products, you're not going to have the same thing as if you imagine what a tech product looks like from the ground up. OpenAI is imagining what tech products look like from the ground up. They don't have any legacy business to carry, and they can deliver it. That's why they've been able to build the fastest growing tech product in history. Are they, for sure going to win? No, this is going to be a very, very fierce fight. But do they have a really good chance to do it? Are they definitely going to run out of money? I don't think so. I think they do have a good chance.
Yeah, that's where I appreciate, kind of understanding this framework shift, which is this is going to be an intense fight. It's the Malevolent Seven.
Yes.
They're going at each other with the knives. It's gunslingers, whatever you want to call it. And you can see how Google's rise has cost hundreds of billions in market cap for Microsoft and Oracle and the rest. So if NVIDIA can keep its leadership, all the more impressive with the TPU performance. Alex, we'll leave it there for now, but much more to come. We appreciate it today.
Thank you so much.
Alex Kantrowitz, Big Technology. It's been a weak start to the year for the crypto trade meantime, with Bitcoin falling below some key levels and trading below 90K. But that's not stopping the crypto infrastructure firm BitGo from going public today. Seeing a nice pop. It's the first big test for the industry this year. It priced at 18 last night, opened at 22.43, about a 23% gain, and we're just below that level now. Here for a first on CNBC interview is Mike Belshi. He is BitGo's CEO. Mike, welcome to you.
Hey, thanks for having me here. Good to see you.
I understand you have some background at Google as well. Is that right?
It is. I'm a veteran from Silicon Valley, the technical industry, I guess. I was at Google in 2010 or so. I was one of the first 10 guys on the Chrome team there. While I was there, I invented this protocol called Speedy, which is now known as HTTP 2.0. By the way, I think BitGo has its name on the standard for that spec. So I think we might be the only crypto company that has its name on a internet standard.
Wow. So I'm talking to one of the OGs here, and we appreciate you making the time. So enlighten those of us who, are trying to follow. What is BitGo? Mike, what do they do?
Sure, we're an infrastructure provider. So it's a brand you might not have heard of because we power institutions and brands that you have heard of. So we're very much a B2B type of company. Our clients are B2B2C. We've grown tremendously over the last 13 years. We have, I think, the largest collection of institutional clients in the world. And then we start with a highly regulated, highly protected security layer around everything that we do. And then we build trading, we build staking, we build a number of services on top of that for our clients to use.
Yeah, do you own Bitcoin? I mean, the more people talk, and I'm sure you saw the comments from Jamie Dimon about how, this is a better technology, to kind of run everything's on the token or crypto layer. That's great. The more it becomes mainstreamed, though, the less impressive Bitcoin's performance does. I'm just curious if you have any comments about that.
I think there's many use cases on top of the digital technology that we have. So Bitcoin deserves full credit for having pioneered this space as the first token that we had. Initially, it was designed, to be potentially a payment system. On the payments side, it hasn't gotten a lot of traction there, but it's certainly very clearly a great store of value. I think all the cryptocurrencies are going to continue to see strength over the long arc of time. But then on top of that, we now have new use cases, right? So stablecoins you're very familiar with may turn out to be an easier payment system for most people because it's one-to-one tied to the price of the dollar. On top of that, we've got DeFi, we've got tokenized equities, and rather than take it from me, I mean, you can ask Larry Fink from BlackRock. I mean, he says every asset, every stock, every bond can be tokenized. So I think there's a lot of excitement, not just from the early players, the technology side, but also from traditional finance, which is really why it makes it so exciting to be here at New York Stock Exchange today.
Sure, no, I imagine. Do you have some thoughts, Mike, at all on the AI trade? I don't know if you kind of watch it just out of curiosity or if you've played around with it a lot yourselves, if it has anything to do with the company, and if you have any point of view on whose kind of chatbot is superior and what that means for the valuations of a lot of these names.
Well, look, on AI, when you think about AI progressing and suddenly being able to do negotiation of contracts for us to be able to pay for services on our behalf, AI is definitely not going to be touching physical currency. It's going to be using something like a digital currency. So these two worlds absolutely intersect. Once we have the API-driven types of money, which, by the way, offers up a whole bunch of opportunities that didn't exist before. You simply can't use your stocks and your bonds and all of your portfolio until you digitize it. So now that that happens, it's not only available to us in all kinds of new use cases, which is what we're seeing in the industry already, but on top of that, of course, this is going to be the money of the AI.
All right. Well, Mike, again, at the leading edge of so many of these technological innovations, congrats today, and we appreciate you making the time.
Thank you. Thanks for having me.
Mike Belshie from BitGo. Coming up, GE Aerospace down more than 5% after posting a solid earnings beat. Strong full-year guidance could be a bit of profit-taking, with shares up 60% in the past year. CEO Larry Culp joins us exclusively about the quarter, his outlook on defense spending, and more. That's coming up ahead. And the Russell 2000s are hitting another record high today, outperforming the S&P 10-1 to start the year. But our market guest is souring on the small cap rally, warning it's a bad sign for stocks. We'll have all those details ahead on The Exchange.
This is The Exchange on CNBC.
Welcome back and take a look at shares of GE, now technically GE Aerospace. They're down almost 6%, and they would be on track to snap a 6-week win streak. This is their worst day since April when the president announced those reciprocal tariffs last year. But today, what happened? The company beating estimates on the top and bottom line, giving strong full-year guidance. Still, investors may be taking some profits after a big run-up in the stock. It's up 60% in a year, outperforming the Mag 7, just saying. Joining us for a CNBC exclusive is GE Aerospace CEO Larry Culp with our very own Phil LeBeau. Gentlemen.
Thank you, Kelly. Larry, you heard Kelly set the table there a little bit. Strong fourth quarter, beating on the top and bottom line. Give me what you're seeing in terms of demand and the outlook for 2026.
Well, Phil, thanks, first of all, for coming to Evendale. I think we feel very good about the numbers we put out today. We talked about the fourth quarter ending very strongly. Orders were up, if you can believe it, 74%. Revenue up 20%. Operating profit up 14%. We saw a 19% improvement year over year in the quarter in earnings per share, and cash flow was up 15%. So just a wonderful way to cap what was an exceptionally strong 2025 for us, where we saw revenues up 38%. 21%. We saw earnings per share up 38%, and we saw cash up 24%. So just a very strong environment, and it's all about supply, because when you look at those order books, demand is strong. I know you had Delta and United out here in the last week. Airlines around the world feel very good about the environment, and we're working very hard to support them.
And yet, you have the stock selling off today. Look, one day does not make a trend, and you've had a heck of a run over the last 3 years. But the stock's selling off today, and you know that there are some on Wall Street, as well as investors, who are skeptical that you'll be able to grow your margins and grow your free cash flow as you were projecting for 2026. What do you say to those people?
Well, time will prove out that the guide we put out today is a realistic guide, and perhaps one we'll beat. But we said this morning that we see revenues up in the low double-digit range. That'll be led by our commercial services business yet again. We think we've got another $1 billion of operating profit growth ahead of us at the midpoint of the range. And we know that we'll see both earnings and cash grow at a healthy mid-teens rate as well in 25.
You know,
and we'll get off to a good start too. I think there was some confusion this morning around what to expect in the first quarter. We think both our commercial and our defense segments will be better than their full year guide in terms of the top line, and we should see a sequential improvement in our operating margins. And from a dollars perspective, both businesses in the corporation will be up double digits.
You know that some airlines believe there's a constraint with your ability, A, to manufacture as many engines as are required, and the service times. The time on wing needs to be better. Are you confident that you can lick both of those issues as concerns that may be out there?
So, Phil, I think you're putting your finger on it. It's more a supply and fulfillment challenge than it is one of demand, right? I think when we look at the work we did last year, where our priority suppliers were up 40% in terms of their inputs to us, that's what enabled us to improve deliveries of new make engines by 26%, and in the aftermarket revenues, another 26%. So we'll continue to work in that form. That's why our flight deck, our proprietary lean operating model, is so critical to what we do. And as we look through 26, we think we'll continue to get better. That'll drive the top line as well as the on-time performance for the airlines.
Quickly, you're a defense contractor, and you know the president's comments regarding defense contractors in terms of stock buybacks and compensation. Do you know what those rules are yet? Have they been spelled out by the White House for you guys yet?
I think the folks at the Pentagon are still working through the details with respect to implementation. But from an intentions and objectives perspective, we're fully aligned, right? We want to get leading edge innovations to the warfighters as fast as we possibly can. It's why our engine deliveries to our defense customers was up 30% last year. And we're investing not only in our existing platforms, but in next generation and disruptive partnerships, make sure we do more of that going forward.
Boeing and Airbus are pretty much back to pre-pandemic levels in terms of production and delivery of aircraft. What do you see over the next couple of years? Are you confident they'll be able to expand their production, especially when it comes to engines?
When I talk to both our friends in Seattle and our friends in Toulouse, they are committed to fulfilling the backlogs that they have that we share with them, right? Both in the narrow body and in the wide body spaces. So we're going to be working very hard together for the rest of this decade to step up in rate to make sure that the airlines that want to modernize and expand their fleets are able to do so with GE Aerospace technology under wing.
And one last question, AI. You and I have talked about this in the past. So many people sit there and they say, well, where's the physical manifestation of AI? It's right behind you in terms of how you believe AI is utilized to make yourself, your company, more efficient, correct?
Phil, I'm not sure we're on the leading edge, but there's no question AI is going to help us be better at design, manufacture, selling, and supporting the 80,000 engines that we have in the field today and the install base we expect to grow going forward.
And just by simply driving greater efficiency.
We're going to have greater insights, and greater insights will allow us to be smarter, quicker to certain decisions, more accurate in certain forecasts, and eliminate a good bit of unproductive time, or muda, as our Japanese friends call it.
Larry Culp, the chairman and CEO of GE Aerospace, joining us from here at their engine facility just outside Cincinnati. Kelly, we'll send it back to you.
Again, that split off one of the great financial performances lately. Gentlemen, thank you both. Really appreciate it. Coming up, natural gas prices are on track for their best week on record and hitting their highest level in more than 3 years ahead of this weekend's massive winter storm. We'll look at the impact across the energy complex next. And as we head to break, here are some of the names hitting new all-time highs today. You've got Charles Schwab up there, but a host of different industries represented. Amgen, Interactive Brokers, Johnson & Johnson, and Caterpillar. More than 60 names in the S&P are at 52 week highs, and we'll have more of the biggest movers when we come back. Russell. Welcome back to the Exchange. Here's a quick check on markets after that big day yesterday. We're holding on to the rally here for the most part. Dow at 427. We're off session highs by about 100 points or so. Russell's leading the way, although look at the NASDAQ making a sudden comeback here. They're right neck and neck with a gain of 1.1%. And let's talk about one specific story that you might all remember from COVID when McCormick, the spice maker, was doing incredibly well. Well, a bit of an unwind here. It's hitting its lowest level in more than 2 years now after disappointing Q4 results. They gave weak profit guidance after forecasting higher costs due to tariffs and commodity prices. MKC shares are down 8%. And Sphere Entertainment, we talked about it yesterday with Charlie Babrinskoy, up 7% today after an upgrade at BTIG to buy. Firm gave a 110 price target, saying their momentum continues to accelerate. Remember, we heard those plans that they announced to build smaller versions of the Vegas Sphere near Washington, D.C. BTIG forecasting $30 to $50 million a year of high margin revenue. For more on that story, cnbc.com/pro. Nat gas prices, meantime, spiking ahead of this weekend's massive winter storm. Pippa Stevens is here with a check on the charts. And Pippa, what are people saying about it?
Well, Kelly, even by nat gas standards, it has been a pretty crazy few days. And nat gas is now up some 60% on the week and pacing for its best week on record. Now, this coming Arctic blast really caught the market off guard. You can see that prices were trading in a pretty tight range here and then started to drift higher on Tuesday before jumping as those weather forecasts really did start to shift. Now, there are three primary drivers. The first is covering. Winter had been pretty mild up until now, and short interest was at a 14-month, high, and so traders are closing out those positions. The second is demand. Freezing temperatures means people are cranking up the heat, and heating degree days, which is a proxy for nat gas demand, jumped from 8% above the 10-year average last week to now 35% above the 10-year average for this week, and that is a lot more power burn. And third is the fear of production freeze-offs. Now, key gas-producing regions, including the Marcellus and Utica shales in the Appalachian Basin, are forecast to get some negative temps according to forecasts from AccuWeather. That can lead to pipes freezing and reduced supply. Down south, especially, equipment isn't always weatherized, and Citi estimates the production loss could be 80 BCF. Now, not all drillers have direct exposure to the jump in nat gas. One metric to look at when we do see this type of price spike is hedges. EQT, Range Resources, and Coterra are the most unhedged, that's according to Mizuho, meaning that they could potentially capture some of the upside from these prices.
So hedges are good or bad, or it depends on what's going on with the price action?
So it depends on what's going on with the price action, and it is very hard to tell because they can be for the month, for the week, for the year. But right now, EQT does have the lowest amount of production hedged for Q1, so that means that they could capture some of that upside from this spike. However, one thing to note here is that you also, if you are a supplier, you don't want to be caught off guard if your own equipment freezes. So sometimes we do see producers are reluctant to sell ahead of something like this, and so that can also make that market more tight and lead to the kind of price swings that we're seeing right now.
Makes it. How do you, Pippa? What do you walk all over Manhattan? Does this girl look like she had a baby like 2 days ago? It's fantastic.
Right back at you, and we'll be in the snow with those babies next week.
I need to get some shoveling calories burned. Pippa, thanks very much. Pippa Stevens. Let's get over to Christina Partsinevelos now for the CNBC News Update. Christina?
Thanks, Kelly. At Davos today, Jared Kushner, President Trump's son-in-law, presented a, quote, master plan for what he deemed a new Gaza. Kushner unveiled the plans during a press conference at the Davos signing of Trump's peace board. The images Kushner showed depicted CGI-generated images of luxury apartments, data centers, and coastal tourism, as well as plans to build more than 100,000 housing units and 75 medical facilities. Tesla CEO Elon Musk said at Davos today that his company will have a, quote, widespread network of driverless robo-taxis in the United States by the end of 2026, yes, this year. He then posted on X that Tesla began robo-taxi trips in Austin, Texas, with no human safety monitor in the car. Robo-taxis first began driving in Austin just this past June. I should say last June. And the French Navy intercepted a Russian tanker in the Mediterranean today, suspected to be part of the shadow fleet that enables Russia to export oil despite sanctions. The interception was carried out between the southern coast of Spain and the northern coast of Morocco, and the United Kingdom provided intelligence. Kelly, back to you.
Wow. All right. Christina, thank you very much. Christina Partsinevelos. Coming up, we're counting down to next week's Fed meeting, where the FOMC is expected to keep interest rates steady. But we got some big data this morning. Did the PCE do anything to move the needle for this meeting or beyond? We will dive into that next. Welcome back. Stocks are rallying for a second straight day here after the president's pivot on Greenland. The Dow, S&P, and NASDAQ holding on to some nice gains, while the Russell 2000 hit yet another intraday high. It's 9th so far in 2026. But my next guest says it's a worrisome sign when the junkiest of all the indices is outperforming the S&P. Joining me now is David Rosenberg, the founder and president of Rosenberg Research. David, it's great to see you. Look, everyone's celebrating the small caps. They're finally participating. It's not just the big guys anymore, the little way. This should be a David and Goliath happy story, right?
Well, I sort of chuckle when everybody's talking about the Russell 2000. I'd probably rather talk about the S&P 600, which at least are quality companies. I mean, there is not a junkier index out there than the Russell 2000. And you know, when you look at what the stock market's done since Liberation Day, the companies that make no money or lose money, their stocks in aggregate have outperformed companies that make money by 2,000 basis points. So yeah, I guess that this is going to the casino. This is what the stock market's become. Basically, it just everything that you just talked about in the intro just tells you how speculative and to a large extent how junky this rally is.
I suppose I would want to look at it and say, finally the Mag 7 are cooling off. Sure, they make money, but people are concerned about how much going forward. And finally, the rally is broadening and going to other. Even if we just focus on the S&P 500, I take your point about the Russells, and you can put that to the side. I'm curious, Dave, while you're here, your larger thoughts, because underpinning the broadening of the rally has been falling interest rates, right? Like that's kind of the real story of this rally the past couple of years. Does that get called into question at all now? What do you make of the PCE data? Are we at 3% and headed there? That's what the market's worried about, I think, for the December figures. And does that stall out kind of the disinflation, if I may, that has helped the market do so nicely?
Right. Well, look, let's just say that back to your first point, I'll get to the second point. The first point on generative AI and the technology dominance has spread its tentacles through so many other aspects of the stock market. Investors are buying, energy infrastructure, and they've been buying utilities and pipelines and financials, because financials, of course, are going to make a lot of money from, the M&A boom and the IPO boom. It's all coming from AI. So, talk about the broadening of the market, it's a bit funny because it's all basically connected to AI. It's just these are various derivatives of what's been going on. In answer to the question, I mean, I think just what's happening in the stock market is not about interest rates. It's about ebullience and incredible investor confidence over the future. There's no doubt that we've had a massive shift in the innovation curve, but there's still lots of question marks in front of what the total addressable market is ultimately going to be for AI. But investors right now have laid down their money like they did with the internet back in the late 1990s. It's just really about investor confidence. That's the bottom line. Is it about interest rates? Not so much, because the Fed's cut interest rates by 175 basis points, but yet the interest rate that should matter the most for a long duration asset, which is the 10-year or 30-year bond yield, they haven't moved that much at all. Do I think the Fed will be cutting interest rates? Yes, I do, but I think for now they're on hold. They're sounding very hawkish. I thought the inflation numbers today were great across the board, especially the core numbers. And I think there is valid reasons to believe that inflation will be a downside surprise through 2026.
Really?
Yeah.
And why is that?
Well, I'll tell you why. Firstly, the tariff impact, as Jay Powell told us in December, that's the irony of ironies, is that the biggest dove on the FOMC is Powell, but he's a bit of a lame duck chairman. I don't know why Trump picks on Powell so much. They almost have the same view on interest rates. It's a committee. It's not one person. Powell's got a powerful vote, but it's still one vote. The committee is more hawkish than he is. I can't say I really know why, but maybe they just don't want to do anything until we get a new chairman coming in May. So it could be just the timing issue. On the inflation, a couple of things. First is that, as Powell said some interesting things at the December at the podium after the meeting. He said that when you strip out the tariff impact, which has been lighter than people have thought, core inflation is running in the low twos. We're almost at target. All these people talking about we're too much above target. You're almost at target once you strip the tariffs out. And then Powell tells us that the tariff impact peaks out this quarter. So what are you complaining about? We're almost at target as is. And on top of that, and Powell, once again, I was there thinking to Powell, I want to go up there and give you a hug. He was talking about the shelter disinflation, because we haven't seen the rents have been deflating for 18 months in real time. But because of the distributive lags in the CPI numbers, it takes a long time to filter through. But that's going to be a dominant theme, and that's 30% of the CPI. Then on top of that, we talk so long about, we're talking a lot about food prices, right? But food inflation has come way down. In fact, remember that I said that, rents and OER are 30% of the CPI. Food is like almost 14%. And food prices in the wholesale market and in the commodity pits, the Goldman Sachs Agriculture Commodity Index is down 12.5% year over year. And that hasn't shown up yet through into the PPI and CPI. We're still talking about food price inflation. Food prices are extremely high, but I think that inflation is not a level, it's a rate of change.
I say, Dave, I haven't seen your name on Kalshi yet, but you keep talking like this. I think you have a shot. I'm just saying. I think you've got a shot if the president's listening. We have to leave it there for now, but I take your point in that you think speculation should be divorced from kind of the broader kind of the way things are playing out anyway.
Remember, animal spirits, that's a big part of the stock market, and we've had that on our hands for a while, and it's continuing.
That is true. Do you use the chatbots? What's your favorite? What do you use?
You know what? I don't use any of that stuff. All I do is I use my Twitter, my YouTube TV channel.
Gemini. You've got a Google account. I'm telling you.
I am so old school. I still have a horse and buggy delivering my milk in the morning. So, I'm an old curmudgeon and a Luddite. So
no, there's a lot of productivity. No,
not my deal.
Your pent-up productivity. I'm telling you, I'm gonna send you some stuff. You're gonna love it. Dave, thank you very much.
You too.
David Rosenberg with Rosenberg Research. Coming up, Anthropic CEO Dario Amodei, how do you say it? Playing down China's AI developments from Davos, saying the country is behind the U.S., but our own Deirdre Bosa is seeing something very different. 'We'll dive into that next on The Exchange. a top-ranking Chinese AI startup has just announced new limits on its coding product after overwhelming demand from users in China and from the United States. As China's AI tools gain traction globally, Deirdre Bosa has more in today's Tech Check. Deirdre?
Hey, Kelly. So coding is really the key battleground in AI. It's the first place where models turn into daily tools and where agents do real work. So a Chinese model having a viral coding moment, that's a big deal. Even more striking, it's happening right here in the US. So Jipu is the company. Jipu AI just went public in Hong Kong, tells us that following the release of its latest model called GLM 4.7, online traffic has jumped fivefold, and the user base for its coding plan is primarily concentrated in the US and China. Now, that was very surprising to me, so I checked in with a few sources who confirmed the model's presence here in the US. One telling me the model is very good on agents and coding, another says that because it's open source, it's able to be fine-tuned, and that'll make it good at specific tasks over time. Jasmine, Tech Check producer, and I tried the coding assistant ourselves, asking it to make an app that tracks the top public companies in Hong Kong by market cap, notifications when the list changes. You're looking at it right now. This is what we got from Jipu after just one prompt, suggesting, Kelly, that AI coding agents, they're becoming commoditized just as chatbots have. And China's edge here is open source. Jipu, like DeepSeek, is using open models as a distribution strategy. They're cheaper to run, they're easier to customize, and they're harder to be cut off from. You mentioned Dario Amodei, the Anthropic CEO, before the break at Davos. He's really playing them down. But if you look at the leaderboards of models, especially open source, the Chinese ones are right at the top.
It's fascinating. Are there any warnings from a national security point of view about people engaging with them?
Yeah, good question. It's open source, meaning that you can actually download it onto your own server. And primarily, startups would do this because they would want something that's cheaper and more able to fine-tune. So no, once you download it onto your own server, you're hosting it, so you don't have those same kind of security risks. However, if you're using the chatbot on a browser like Jasmine and I did, yes, technically your information, if it's sensitive, is going back to potentially a Chinese server, or the Chinese will be able to have access. Same argument as DeepSeek, right? If you actually use the chatbot, that's a national security risk. If you're using the API, the model itself, there isn't a risk, and that is why adoption is surprisingly large, even here in the US.
What power, are these kind of NVIDIA's lower powered chips? Are they Chinese competitors like Huawei, do you know?
I'm so glad you asked me, because Jipu made headlines about a week ago for building the first advanced model entirely on Huawei chips. I don't think it's this model, but it was a multimodal sort of image model that they say they built entirely on Huawei chips, and that is a really, really important point. It means that they're doing more with their own homegrown chips, which is the topic and a theme that we've really been hitting on that we're going to see more of this year. Is last year it was really about Chinese software and open source models. This year, I think you're going to see more advancements in hardware, chips, and infrastructure.
It's really interesting. Deirdre, thank you. We appreciate it. Our amateur coder, everyone's an amateur software developer these days. Deirdre Bosa. Coming up, free lollipops, exclusive product drops, and a Mr. Beast partnership. It's not a Gen Z pop-up shop. It's Lowe's. We're going to go inside the home improvement giant strategy to attract new and younger shoppers. Next on The Exchange. Welcome back to The Exchange. 40 is now the average age of a first-time home buyer. It's an all-time high, according to the National Association of Realtors. As record low affordability prices younger people out of the market. That's had a big impact on home improvement stores, on Lowe's in particular. But the company has a plan to lure Gen Z and millennials into its stores, regardless of home ownership, as both Lowe's and Home Depot have been underperforming. Retail and consumer reporter Melissa Repko is here on set with that story and a little taste of what these new initiatives might look like.
Yes, Kelly, it might sound surprising, but some of them are as simple as handing out free lollipops in stores. They started doing that this month. And they also relaunched their Lowe's Kids Club, which is a free workshop they do, think like DIY projects for little kids.
Home Depot's been doing that for a long time.
Yes, they have. And so these are really projects or they're part of a broader push to get people who are aspiring homeowners into the store. Some of those are younger parents, but they're also Gen Z and millennials that are looking to influencers for ideas about how to fix up their space. That may be a rental, but of course, those could be future customers for Lowe's. And Lowe's wants to find a way to make themselves relevant even today as they wait for the backdrop to improve for housing.
I mean, is it since Home Depot's been doing this, is this a story about kind of these national trends, or is it just that they need to catch up to Home Depot, or to the earlier point, are they both underperforming because people are not, there's not a lot of housing activity right now?
It's really a combination, but Lowe's is more exposed to DIY in particular, which is why it's felt more of a pullback and maybe has more of an opportunity this year as people potentially dip their toe back into DIY. The reason why it's more exposed is because about 70% of its sales come from DIY shoppers, and that's about half at Home Depot. So it's more exposure to that customer who's not the pro who comes more steadily for electrical equipment or things like that.
Right, exactly. It might be a little bit more of a discretionary thing. What would you say about kind of shopping trends more broadly? Is the housing market being quiet a big hangover on other stores as well? I think about a Home Goods. There's a lot of that usually drives people into stores. So is it felt beyond them?
I spoke to analysts for this story, and one thing they said that's looking more hopeful as we go into the year is that furniture is picking up and decor. And so that could be an early indication that people are willing to spend a little bit more discretionary on their homes. But of course, the biggest problem here is really twofold for home improvement, which is not just pressure on discretionary, which we hear about from all retailers, but the fact that mortgage rates are still really high and very sticky. And while they're starting to edge down, the question is, will people embrace this potential new normal of higher rates? One promising thing is Gordon Haskett does a survey, and they found in their survey that in the most recent quarter that about 35% of consumers said they'd be willing to buy a home at rates between 5.5% and 6%, and that was 25% last quarter. So potentially people are starting to adjust that rates may not come down to where they used to be, and they may still have to get off the sidelines.
Yeah, well, if we can get the 10-year, I mean, there's the mortgage rate, 6.2% today. So
yes, it's getting closer. It's getting closer to maybe that tipping point for people.
Yeah, so furniture is an area where you think
there's some indication that's picking up. And again, could that be a leading indicator for home improvement? Lowe's and Home Depot certainly hope so.
All right, Melissa, thanks. Appreciate it. Melissa Repko. That's it for us here on The Exchange. I'll join Brian Sullivan for Power Lunch, though, and we'll be talking to Baseball Hall of Famer Derek Jeter. If you can guess his next big investment, it's sports-related, but it's not baseball. And that's next after this quick break.
It's another day of gains, not just for stocks, but energy as well, as a massive storm gets ready to take its best shot. Welcome to Power Lunch, everybody. Alongside Kelly, I am Brian. The market may be facing a storm of its own because Mag 7 earnings are about to kick off. Will that be the spark to reignite the trade, or is buying big tech, so last year?
That's a provocative question. And speaking of tech, we're doing a power check on one of the hottest chip names in the market. Intel has rallied 200% from its 2025 low. It also reports after the bell today, and we'll get you ready for those results. And coming up later, Baseball Hall of Famer, entrepreneur, and the global sport surging into the mainstream. Derek Jeter is making a strategic new play. We look forward to talking to him.
Absolutely very cool to have the captain, Derek Jeter, coming on the show, but that's in a few minutes. Let's start this hour with your money and big tech, because there's a big new note out that is sending Meta skyward. Jefferies laying it on the line and laying out 5 reasons you need to think about buying the parent company of Facebook, Instagram, and WhatsApp. Now, those reasons include valuation, as well as a bullish look toward earnings. Meta has had a bit of a rough run lately. It is down 5 of the last 6 months. Let's shut up and get more now with the lead author of that note, Jefferies tech research analyst Brent Thill. He's got a buy on Meta, a $910 price target. And Brent, I'm going to just wildly speculate that the fact that Meta has been down 5 of the last 6 months makes the valuation more attractive to you.
Hey, Brian. Yeah, that's right. I mean, I think there's several factors. So remember at the beginning of last year, everyone hated Google. It was an AI roadkill. They weren't anywhere. And we think the same thing is happening with Meta at the beginning of this year, being treated that they are nowhere in AI and that all these investments are a waste of money. So we think that there's an analogy, which is last year, if you bought Meta on all the concern that all we were going to do is use ChatGPT to find everything, that was an amazing opportunity. And Google has gone up, 60+% since that moment. So we think there's a playbook in internet, which is buy the most hated name of the biggest names that aren't going anywhere, and that is Meta right now. Secondarily, the fear of all this AI CapEx, that they're going to blow all the money and not have any return. I think that's silly. I think we still see an incredible platform, and the engagement is off the charts in terms of their ability with advertisers to gain ad dollars. There's an emerging business in enterprise. Jefferies is looking at using some of their enterprise technology that they've developed for consumers with Llama to use for our own organization at some point. So we haven't gone there yet, but I think there's an incredible opportunity. Remember when Amazon launched AWS, everyone was like, wait, what is this? There's an interesting on-ramp with their open source solution in AI that enterprises can use, not just advertisers or consumers looking for the newest golf club if TaylorMade comes out with something. So there's just a bunch of different call options that we think could go right. And it's the most hated story right now. So great stocks have great controversy. This name has an incredible controversy going on. And so we could be wrong tactically when they guide, that maybe they come out with a really aggressive guide in CapEx and it disappoints, but we use that as a buying opportunity.
Brent, just to jump in here, it's Kelly, and I appreciate the contrarian case, obviously. And I mean, I'm sure everyone wishes they were in Google now to have experienced these results. But I can see Meta having an excellent business model with AI, optimizing ad load. Instagram, as I talk about, the algorithm is better and better. It's better experience. But it's, what is it, $1.5 trillion market cap company? I mean, is it ever going to be 4, right? What are the numbers that make this a behemoth rivaling those of an NVIDIA and a Google, even a Microsoft? It's much smaller than they are. Can it be very successful and have some of these strategies that you're talking about, but still just not be worth, quite as much?
Yeah, I don't think our thesis is based on, hey, this has to be a $4 trillion market cap. But I think what we see is a company with $30 of earnings power. And again, you can put a 25 to 30 multiple on it, and you have obviously, at a peak of 30 times earnings, you're at $900 a share, right? Stock's $645. So I think we're not, to your point, I'm not expecting this to become Google or what's happened at Microsoft. But I think that there's a second tier where you look at, could this theoretically get to that type of earnings power? And the answer is yes. And you have to put a big multiple on it, and the answer is no. And so what's the outcome? It's pretty positive.
Well, I tell you
And
what,
so,
this is it's going to sound weird, but that's what I do. Couple times the last few weeks, I've been on Amtrak, going from New York to D.C. And as you walk forward to maybe use the facility or whatever, you're walking by people and you can see they're all on their phones. And they're all of them are on Instagram. All of them on Instagram, on the New York subway, on airplanes. Not looking at people's phones, but they have them out. How powerful is Instagram and its possibility to the Meta story? Because I feel like it's increasingly Instagram's world, and we're all just kind of living in it or around it.
I think it's going to become more powerful in the world of AI. Look, I'm a big fan of your show, and I watch This Morning up from Davos. So imagine this morning, it's not just the show of interviewing the CEO of Workday and the number of executives that you have on Santa Fe. You go through the list. What if there's an immersive experience where I'm able to put on the Meta glasses and Andrew Ross Sorkin is doing interviews, walking through the audience. We get to smell and kind of feel the environment in Davos. I mean, today we see it from your set. We don't see it in a real immersive experience. And I think there's no one else better positioned than them to create this experience. And I'm not saying like this is going to happen near term, but can the world in the next 3 years change where they can create these level of experiences? You're not going to get that at Google. You're not getting that at Amazon. And you're certainly not getting that at Microsoft. And we like all these names for different reasons. But like they have, to your point, this ability with advertisers to engage and immersive content to engage and keep people on the platform. I have 3 young teens, and 2 of the 3 are old enough to use these technologies, and they'll say, look, I use Snap to send messages, but I go to Instagram to learn and have these immersive experiences, and I go to TikTok to have a laugh.
Yeah.
And I really think this immersive experience, what they talk about as teens, and you're seeing it even in the older generation, including me, we're all going and we're getting, you go 5 minutes into the platform, you spend an hour. We've all done this. And I'm still doing this. So I look at this and say, 3, 4, 5 years from now, what is this going to look like? It's going to be a lot more exciting. And what they're doing, the vision of AI is going to be there. Zuckerberg put in the first level of AI. I believe the next level of AI will pay off into this new world that we're talking about. And it's hard to see it right now. But if he pulls it off, and to your point, Brian, that everyone on that train or the plane has this in their hand, it becomes that becomes even more immersive.
Yeah.
The advertisers go to where the experiences are immersive and where people are at. And I think they have a great opportunity.
And that would bring it full circle.
Is it going to be perfect? No.
Then it would be Meta. We always say, should they have dropped the Meta? That would be the Meta play after all these twists and turns. Brett, thanks. Really appreciate it. The shares are up 5% today. Thanks for making the case.
Thank you.
Yeah, I just urge everybody, if you haven't, read Ready Player One. You can watch the movie as well, but that's what he's talking about. You know what that?
No.
It's an amazing book and movie. Check it out. That's exactly what he's talking about.
Yes, coming to life.
Living in a fantasy world where I have so much hair, so skinny.
That sounds good to me. We're going to stay with tech and get to another name that got a bullish call from the street today, which is Alphabet. Upgraded to outperform and a strong buy over at Raymond James. Stock getting a bit, about 1% on that. But look at the gains this month. It's had only one negative month in the past 10. MAI Capital Management Chief Market Strategist Chris Crisanti is here now. He is an Alphabet shareholder. Contrarian at heart, Chris. So maybe we'll get to more of it. But this one is firmly in the mainstream right now. You're not afraid of that?
I'm a little bit afraid of it, Kelly. I mean, it's had a great run. It's our largest single position, not least of which because it's up, 60+% over the last year. So I don't think it's going to be up another 60%. But remember, a year ago, we were talking about all the threats to Google, like search is going to be outmoded by AI. But now, Apple's using Gemini for the new chatbot with Siri. And now Google is ascendant. So in that way, yes, I don't love having a consensus ascendant name. But the future seems so bright that I'm happy to hold it.
It's unbelievable. Now I have people accusing me of being a Google lover. I'm like, I was using ChatGPT a week ago, and now I'm all in on Gemini. This is how quickly this technology is changing. That brings us to the NVIDIA question. Gemini is powered by Google's own chips. I understand it's TPUs. They don't need NVIDIA chips. NVIDIA is doing just fine, but it's kind of been moving sideways. Still almost a $4.5 trillion market cap name. you're buying it here. Why?
I am, and you know me, Kelly. I'm a value guy, and I'm uncomfortable with Mag 7 multiples and Mag 7 consensus appreciation. So it took me to get over the hump to buy NVIDIA, but the math is just so compelling. And like you said, you know, you can't really get to the AI toll road without going through NVIDIA. Yeah, Google will have proprietary chips, but most everyone, the market share of chips for NVIDIA is well over 80%. And so what we're seeing here is as long as you're convinced that the AI spending train will keep on going down the tracks, then you buy this stock because they're the single largest beneficiary of that train. And I'm convinced because the folks funding that train are the best capitalized technology companies in the world. So Microsoft, Amazon, Google, they're funding the AI train. So I'm comfortable that Google looks expensive through the rearview mirror, but is actually almost as cheap as Meta is now, but is growing at almost 3 times the rate. So that's the Mag 7 I would ride for 2026.
So finally, then, you want to chime in on the Meta sort of argument or case that interests you yet, or is there anything else?
I think your last guess was exactly right. It's a nice time to buy Meta, and Meta's clearly going to be one of the winners. And it's a nice cheap valuation. But the reason I somewhat prefer NVIDIA, and by the way, we do own some Meta. The reason I prefer NVIDIA is because they are king of the mountain in AI. You can't get there without them. And so if you believe in AI, that's really the only decision you have to make before you embrace NVIDIA, which, by the way, if you look 2 years down the road, is just about as cheap as Meta.
All right, Chris, thanks. Really appreciate it today. Chris,
good to see you again.
MAI Capital Management. Let's get over to Rick Santelli now as we focus in on yields today, with the 2-year breaking above 3.6% to its highest level since December after the PCE numbers this morning. Keep an eye on this as a proxy for what the Fed's going to do. And Japanese yields are in focus as well, with a 30-year sitting near its highest level since 1999. Rick Santelli has more from Chicago. Rick?
Yep, their 30 years well up there. Their 40 years astronomically high. But then again, 30 and 40-year trade by appointment. It's the 10-year that's the benchmark, not only in Japan, but across the world. That's